There are curious things happening in Germany, Tom. There's layoffs. Well, maybe stuff that nobody really expected. Some are saying it's good. Some are saying or it's bad. Somehow it's relating to gold because there's also BRICS doing BRICS things, and you also want to talk about gold-backed bonds for a reason. So that's going to be interesting. Lots to talk about. So I am looking forward to this conversation. And for everyone listening, after Tom, I also have two CEO interviews lined up for the barbecue. One is with a gold company that just published their PEA. It's a rather large thing. And then there's another one with a copper gold explorer with a project in Newfoundland. So a busy Real Money Talks episode here today, which probably means I should be shutting up here. But Tom, last time you and I talked about oil, and ultimately this time I want to get your view on gold, but nothing worth having in life ever comes easy, as they say. So I'll make it more complicated here by kicking it off with a Financial Times headline that came out recently that quotes Volkswagen considers closing factories in Germany and cutting jobs, unquote. And it seems like that got a lot of attention online, especially coming on the back of what came before it, including from you, Tom. But it's really only one data point, I suppose. So why is it? Why is it such a big deal? Why do you care about it?
Well, I find it interesting. I mean, clearly, Germany's been in the throes of a deindustrialization
Hmm.
process now for a while because the German green mafia has been running the country, and they were put in power by Angela Merkel. And it's interesting. I just literally published an article on the blog. I haven't published anything on my blog in 5 weeks, but the German state elections yesterday in Saxony and Thuringia were important. And this is a story that I have to comment on because I'm one of the few people who really understands and has in the past explained what's going on in state German elections. And I've gotten very good advice from German politicos and people who are in the know and in the German political scene as to what all this stuff means. So I'll try and quickly break it down because I could get lost in the weeds of all the rest of all the electioneering and everything else. And I've got the article up on my blog over at tomluongo.me. So you can go read what's going to go on here. But yesterday in Saxony and Thuringia, AfD, the Alternative for Germany, nominally the evil right-wing Nazi party, resurgent, won in Thuringia and nearly won in Saxony, and has thrown, and because of that, and because of the split of Die Linke, the former East German Communist Party, over Sarah Wagenknecht, we have a very interesting moment in time. These East German states, and there's two of them, the Saxony and Thuringia yesterday, and Brandenburg on the 22nd, all represent AfD, really strong AfD strongholds. Brandenburg is a lot more mixed. There's like four parties all polling within 5 points of each other between 15 and 20%. So it's a little bit of a mess. But what's important to understand about this is that, and the Volkswagen thing will make sense to you in just a minute once I explain what's happening here, that AfD is not going to become part of the state governments in Saxony and Thuringia, most likely, or Brandenburg. Maybe there may be a way that it works itself out. What this is really about is taking away the Greens' ability to veto all legislation they don't like in the German upper house.
Mm.
Because of the way the German upper house works, each of the states have to vote as a block, and the parties that are represented in the governments of each state have control those seats in the Bundesrat. So if the CDU, SPD, and the Greens make a grand coalition, and the Greens were only in there as a 5%, they get say the SPD and the CDU get 45 or 46% of the vote. And then they tag the Greens along for 5%, and they form a 51% coalition, which is basically what they did in 2019. Well, guess what? The Greens have one vote in Thuringia, and that's okay because they actually can, for all intents and purposes, control all four votes. And so because the whole state has to vote as a block, and so any one party can block and force the whole state to abstain on a particular piece of legislation in the German government. That means they vote against it. Abstaining is the equivalent of voting against it. So therefore, right now in the German upper house, there are three parties with the veto or the effective veto power because they have more than 35 votes in a 69-seat parliament, Bundesrat. The CDU, the SPD, basically the equivalent of the American Republicans and Democrats, and the Greens. that the Greens having 44 effective 44 votes in the Bundesrat was engineered by Angela Merkel on behalf of what I like to call Davos, in order to push Germany into its current state of affairs, where the Greens are said effectively running policy. Olaf Scholz doesn't run the German government. Annalena Baerbock and Robert Habeck do from the Green Party. Okay. Habeck, vice chancellor, Baerbock, foreign minister. Scholz is a captured pawn, even though the SPD is the majority player in the coalition, but really the power is vested in the Greens. Okay. Because that's the way Merkel set it up, and that's the way everybody wants it. Well, that's the way everybody outside of Germany wants it. Okay. The CDU traditionally is the party of the German industrial class, especially its sister party, the CSU in Bavaria, which is where all the major German industrial big names are headquartered. Volkswagen, BASF, Siemens, blah, 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 BMW, Bavarian Motor Works, right? So they've been effectively neutered in terms of German political, fiscal, and so what I'm looking for, domestic policy now for years. And it's led them to where they are today. They're decommissioning all their nuclear power plants, and they're deindustrializing, and all this insanity of solar farms in Germany. Like, you and I were just talking before we hit record about how cold it is and where you are in Belgium, and I live in Florida. Like, solar makes sense where I am. Doesn't make sense in Germany. It never has. But this has been part of the process. Now, we can go farther into the weeds as to who's behind this policy and blah, 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 blah. And, is it like there's always this worry about Germany aligning themselves with the Russians because the Russians have cheap energy. The Germans have an efficient industry. This has been a thing that the French and the British and the Americans have been dead set against for a century, blah, 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 blah. And it's literally driven so much of NATO policy and the Cold War and so many things, right? So the day after Saxony and Thuringia go populist right, we see this piece of news come out saying Volkswagen is threatening, not closing, threatening to close. That is a dog whistle that this is a dog whistle from them that the CDU is taking power back in Germany. Because the CDU is going, if things work out, the Greens are going to be shut out of even Saxony's government, where they got 5.1% of the vote, but they're probably going to be shut out thanks to Sarah Wagenknecht. And what we'll wind up with is a grand coalition with the CDU, the SPD, and her party. Okay. Populist left, not, kind of the AFD of the left, a populist left party. It'll be an unstable coalition, but it was probably designed that way. In Thuringia, there is no easy coalition, but the Greens didn't pass the 5% threshold, so they're out completely. They're out. So there's 4 votes away from the Greens in Thuringia. There's likely 4 votes taken from them in the Bundesrat in Saxony. And then Brandenburg, they're polling right at 5%, but there are 4 parties that make up 80% of the vote or 75% of the vote. They're going to get cut out of Brandenburg as well. And if they poll less than 5%, they won't even be eligible, right? That's the goal. And if that happens, the Greens lose their veto majority power in the Bundesrat. And the Volkswagen thing is absolutely a dog whistle that the German industrialists have had a fucking enough of this bullshit. And they're ready to start taking control of Germany again and stop pushing Germany towards a future aligned with the European Union's drive for fiscal and political integration, because the Germans are being harmed ultimately by the euro. Okay, they're funding the mess that is the EU, and the Germans are being bankrupted over it. And the German industrial class isn't happy about it, but they've been captured and sidelined by the freaking Greens for almost 20 years now.
Yeah.
And so if that happens, well, it'll be down to Brandenburg. And you'll know if this is actually, if I'm correct about all of this, if you see the CDU and the SPD get together, freeze out AFD in Saxony, and make a deal with Wagenknecht, with BSW. And if that happens, then you know that that's what's occurring in Germany. And Volkswagen is only threatening here to put political pressure on the CDU to do the right thing. I would not be surprised, actually, now that I think about it, if we see another major German industrial titan, make similar noises in the coming days, if there's any pushback here. But Volkswagen doing this, big deal. And I think it's as much a dog whistle, as I said, as anything else.
Do you think the EU's monetary and fiscal policies are going to start changing based on what's happening in Germany here?
Okay, let's not get too far ahead of ourselves, because there will be a strike back. They're not going to be happy about this at all. Okay, this gets really, really murky from here, Antonio, and I don't want to go too far down this rabbit hole yet. I can see a whole variety of really interesting things happening here, but I want to see how these parties react to this, because Wagenknecht to me is an unknown. She's not somebody I understand. Okay, and I've asked Germans to kind of help me get me up to speed on this. You know, there's the story you're told, and then there's the real story. And I don't know the real story about her. Was she a Davos plant to split the vote, you know, and be a Pied Piper? Was she put there to split Die Linke, which was very powerful in both of these states? Or was she done? Was that to help the Greens or to hurt the Greens? It looks like it was to hurt the Greens, but I can't say that definitively. I'd like to, but I can't. So what I'm telling you now, as of Labor Day here in the United States, we're doing this on September 2nd. As of right now, it's interesting. Let's see how it plays out to see if, then we'll get some implications as to what this really means. We got some other interesting data points that are coming that are on the hump as well. Germany is now, or the EU is now, importing more Russian gas than American gas for the first time since the Russian-Ukraine war started. This is a big deal. And who's going to be importing most of that Russian gas? Well, it'd be Germany, of course.
Yeah.
So the German industrialists, I think, are putting their foot down. And if they are, that means that the CDU has been blessed to be put back in power, and in the short term are going to use AFD's popularity in Thuringia to start the realignment of German electoral politics, which also means that if I'm right about all of that, that's a big if, but if that's correct, it also means that the traffic light coalition in Berlin is on very thin ice, because the Free Democrats could leave the coalition anytime. Christian Lindner, the finance minister, is, he's really unhappy with where things are. His party got wiped out. And the Greens could leave the coalition out of spite. Hell, Scholz could dissolve parliament and call for snap elections and go for a CDU, a kind of classic CDU, SPD coalition government. And possibly even, something is going to shift here, right? And while they'll put up noises about continuing the cordon sanitaire around forming governments with AFD, I think that, if the Social Democrats, if the SPD and or Wagenknecht do not play ball, right? And I think they will, because otherwise the SPD is looking at being completely wiped out. So if they want to salvage what they have in the western part of Germany, where they still have their strongholds, like Rhineland-Westphalia and a couple other places that I can't think of off the top of my head, then it makes sense that they're going to shift back towards, quote unquote, the center, shift away from the Greens, shift back towards the center of the German electorate. And, that's good enough, to be honest with you. And then, and then a couple of years from now, when we go to German national elections again, if they don't do this, the German people will, I think at that point, finally say, you know what, we don't care what you people say, we're voting AfD. And then it gets really crazy really quickly. But there could be a political earthquake here in Germany going forward. And if that happens, like, dude, that's like the end of the EU. And as a thing, because it only exists at this point because the Germans are the ones footing the bill. If the Germans say, you know what, nuts to that, we're setting policy and we want X, Y, and Z, well, then that's what's going to happen. But, I don't expect anything to shift quickly, but it's kind of like what I'm seeing here in the United States. You've got a Democratic Party wholly beholden to either one faction wholly beholden to China, the other faction wholly beholden to Davos, and the populists are dead in the water. They're back in JFK and Tulsi Gabbard, and who are now their only political home is Trump. For the Republicans, you've got the classic rhinos that map to the neoconservatives. You've got and the British. You've got the Obama wing that maps to Davos, and they're in power, and Harris, and they're all in power. So now what? Like, what you have is, and then you have the banking class here in the United States is going, look, dudes, we're not giving up American commercial banking interests. And, we like funding the military industrial complex. We don't need to start any wars. We just need to rebuild the Navy, and we need to rebuild our infrastructure. And we can do that at home. We don't need to send that money overseas and rebuild the world. We need to rebuild the United States. And this has been my thesis for 3 years now. And I think it's actually playing out exactly the way I had originally, free associated or, theorized that could happen. And this is what's going on now. So are we going to see a similar kind of realignment and slow political shift in the German, for lack of a better term, the German deep state or the German political elite? Maybe. I'm seeing noises out of Giorgia Meloni in Italy that she's feeling stronger now, that she's got American backing to allow her to stand up to the EU on things like immigration policy and other things. That's a big tell as well, because the first couple of years that she's been in power, she was clearly having to bow to Brussels while Biden was, in power, and Obama was in power in the United States. But as that power shifted away from them, you're noticing Meloni now acting the way we expected her to act originally when she came to power. You got to, this is the way you have to read people based on their political situations. It's, they can't always act the way they would like to act. They have to act the way they can act and survive long enough in the hope that something good comes their way. That's the way you have to read all this. And it's very frustrating for a lot of people to listen to that, because they just want things simple. And I want things simple. I want to back Giorgia Meloni going up against and slapping Ursula von der Leyen in the face. But, if she does that, she's going to get crushed. Right. So, you have to play the game, folks, and I think we're beginning to see that. Scholz is going to be an interesting character to watch in Germany, to see how his positions change over the course of the next few weeks. You're going to see roughly the same rhetoric out of them. Oh, we hate the Nazis and blah, 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 all that stuff. Well, I wonder how long that's going to last. Because if the polls hold the way they are in Brandenburg right now, or if AfD shifts a couple of points up as they get frozen out of coalition talks in Saxony and Thuringia, and everybody's like, you know what? Piss on you people. That's wrong. And, they stop supporting the CDU or the SP, and they move and AfD moves a couple of points in the right direction. Hell, another migrant attack on, a young woman could easily shift those polls 3-4 points between now and the election and literally change everything. So we'll see what happens.
Yeah, I told you, tired Tom Luongo is much more fun because he's got even less of a filter than normal Tom Luongo. So this is we're going into fun territories here. What I'm finding interesting here, though, is that you're reading into this much more from a political point of view, because
Sure.
most people who commented
Although,
on this online basically commented on it from the angle of, oh, this is just the canary in the coal mine, once again showing that there's going to be more economic trouble worldwide, and eventually it's going to spill over into the US. And then, they're coupling it to the layoffs that we're seeing in the US. And then essentially in the back of that, making the argument for more fiscal stimuli and then more bullish gold. That's kind of why I said at the beginning, ultimately, I want to talk about gold, because that's kind of the connection that most people are making in between that. So, but you're not seeing this as kind of a sign for more layoffs. It's much more political. That I find interesting.
well, no, I think I don't think Volkswagen's bluffing here. Okay, what I think is that I think some of that is correct. Like it's like everything else. Like the best lies are the ones that have nuggets of truth in them, right? And in this case, Volkswagen, threatening this kind of situation, I think everybody wants to make the argument that the United States is in serious trouble. Oh, if the Germany's in trouble, then they're clearly going to blow back in the United States, and so Powell needs to cut interest rates. So I got news for you: the people putting those ideas in everybody's head, they work in city of fucking London, because they're all about to lose their freaking ass over Ukraine being in technical default, as Alex Craner and I have talked about on my podcast earlier in the last week. And Alex has been making the rounds doing his talk. And if anybody has not heard Alex's arguments as to what's going on with how vulnerable the Bank of England and the UK gilt market is over Ukraine's technical default, I tell you, stop listening to me. Go listen to Alex and then come back and finish this one. It's that good. And I don't say that about a lot of things in this life, but there's a reason why I think Alex is one of the very best commentators in the space, and why I adore doing media with him, and consider him a friend. And it's really impressive. The Bank of England is the guarantor of a lot of Ukraine's debt. The reason why Brussels and London, and to a lesser extent people in Washington, are so adamant about Ukraine can't lose, Russia has to be destroyed, is because they're all going to go bankrupt, and the freaking bonds are all going to go to zero if they can't force the Russians into a situation where they have to pay reparations, a la Germany after World War I. It's the same playbook, folks. The Brits are running the exact same freaking playbook they ran 110 years ago. Again, go read Richard Poe's latest book, How the British Created Communism and Blamed It on the Jews. He's expanded those arguments that he did on my podcast, and he's done in his own work. It's a brilliant book. It's worth reading. It's for at the very least to see World War I from a completely different point of view. It's like watching the U.S. Civil War from the point of view of it being a color revolution created by France and Germany to split the North and the South. Okay. The way we view our own histories here and the major events of the last 150, 200 years, when you start to look at them from the perspective of who benefited and who was pushing that particular crisis point in history, everybody commented like World War I was a war nobody wanted to fight, except that the British wanted everybody to fight. Well, World War III that we're on the verge of right now is a war no one wants to fight. And yet somehow the British keep pushing the Ukrainians to attack the Russians and cross their red lines. And it's always the British, because they're the ones with the most to lose. Okay. And what they always do is set everybody who's more powerful than them against each other. So everybody that sits there and goes, well, the British don't matter anymore. The British Empire's been over for 100 years. It's really the Americans that are the problem. Blah, blah, blah. Like, exactly. Now ask yourself why Europe and Britain are trying to get the United States involved in a land war in Asia. Or an internecine biblical war in the Middle East. Who benefits from that? Well, I'll tell you who benefits from that. If you're the guy in fourth place at the table and you can get the players in first, second, and third place all to fight amongst themselves. I got news for you. Now everybody's brought low, and now the guy in fourth place is a lot closer to first place than he was originally. That's games theory. That's how this stuff works. And if you're not sure about how if you've never done this, I'm telling you, sit down, find 3 friends that you consider at least vaguely disposable, and go sit down and play a game of diplomacy with them. Because by the time you're done playing that game, y'all won't be friends anymore. After you've all backstabbed each other to death in order to try and win this stupid freaking game. Like, I'm dead serious. I don't play diplomacy anymore for literally that reason. I like to play games with people I like, not people I don't want to not like tomorrow. You know what I mean? If I want to burn all my friendships, well, then, hey, let's play diplomacy. I'm dead serious. And this is the way this stuff works. And everybody does it to a greater or lesser extent. The British are just exemplary at it because they've been doing it for 350 freaking years. Okay. So when you look at it, when you look at these things, when you start to see the world this way, you start to realize that, oh, that's what this is about. Everybody and their brother at this point in time, right now, wants the Federal Reserve to drop interest rates as low as friggin' possible, as fast as possible, because they're all losing their ass because the United States, the Federal Reserve, and along with the Bank of Japan, are draining the world of the excess dollars that are sloshing around the world. There's still too many of them sloshing around the American economy for my taste and for a lot of people's taste. That's fine. But what I see the Fed doing is trying to make the domestically circulating dollar the more important dollar than the offshore globally circulating or euro dollar market. That's what they're doing. They're using the Bank of Japan to help them, who is now tightening monetary policy, allowing interest rates to rise, intervening in the yen market, unwinding the yen carry trade. What is that doing? It frees up some dollars, and then they all drain away because as the carry trades unwind, now people are getting margin calls and they're getting wiped out and blah, 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 blah. And now if no one comes in, if none of the institutions, i.e. the central banks, come in and bail anybody out, well, guess what? At the end of the day, all those dollars went away. And if the Fed refuses to backstop anybody outside the borders of the United States, which is the big if, by the way, and if that's the case, then the U.S. central bank will backstop the American banking system and let everybody else's banking system hang, which is why everybody is trying to it's been trying to force Powell to pivot for 2 years now, over 2 years, and they can't get him to do it. Finally, now that things have slowed down in the U.S. thanks to 5.5% interest rates and all of the financial juice from all the fiscal spending has dried up here in the U.S. Now we're seeing a slowdown, and now it's time for the Fed to cut interest rates. But I don't see the Fed cutting back to the zero bound. And everybody makes the argument that, well, it's either going to be 5.5% or zero. I'm like, no, it can be 4%. Powell could cut to 4%. It still would fuck a lot of people and still achieve a lot of his goals.
Well, how do you reconcile the outlook for a World War III or just general global turmoil, if you want to call it that, with there not being fiscal stimuli and monetary stimuli? I mean, you look at the last two world wars, fiscal stimuli, especially World War II, right? Fiscal stimuli in the U.S. went crazy. I mean, what did you guys spend, like 40% of the GDP on war?
We spent a lot more than that. We exited World War II with a debt to GDP ratio over 200%.
Yeah. Well, but so there you go. I mean, and so why not? How can you reconcile, having all these issues and not sooner rather than later falling into more fiscal and monetary stimuli?
Well, again, are we going to have a world war is the question. I don't know. I can see the world war potentially happening. I can see people trying to goad us into that war for their purposes to destroy the United States. And if the United States says no, and as far as I'm concerned, I can't see anything coming out of the Pentagon, which tells me that they want to fight a freaking land war with Russia. They barely want to support whatever Israel's doing at this point. Like, So again, attacking Russia, sending Israel off half cocked like Rambo without a jockstrap against the Palestinians and Hezbollah, those are British operations. That's the only people they serve. It serves their agenda. It serves their traditional foreign policy. Okay? So not necessarily the United States. Now, are there factions within the United States that are sympathetic to that worldview? Absolutely. Victoria Nuland and Anthony Blinken and all of these people of Ukrainian descent who were put in positions of power in order to do this, to run their personal, okay? Chrystia Freeland in Canada. Everywhere you go, Alexander Vindman, Fiona Hill, all of these people are Ukrainian. No, again, nothing against Ukrainians, but understand that there are some very powerful people of Ukrainian descent and a particular political persuasion, neo-Trotskyites, who are still butthurt about losing the friggin' revolution to Stalin, and who were goaded into that and who were placed in those positions to affect that again, go back to Richard Poe. He's firmly convinced that Trotsky was a British agent. And so you have all these people, you have all the descendants of these people, you have this stuff has been festering forever. It's been festering since World War I. It's all a continuation and so from one perspective, not all of it. From one perspective, it's all a continuation of the same policies led up to World War I that grew out of the Reconstruction in the United States. All of it, like the United States Civil War, can be looked at as the first failed color revolution in British history, because Lincoln was supposed to lose. The country was supposed to split in two, with the South being effectively the commodity vassal state continued of continental Europe, and the northern industrial might strangled in its crib before it got a chance to because they could see what happening, because they could see the trade deficits. They could see the trade deficit between Europe and the United States collapsing. This was in a time when we had hard money and trade deficits mattered, right? Today, trade deficits and surpluses are kind of an anachronism, a la Martin Armstrong. He's not wrong. It's more of an accounting anachronism than they are anything else. But he's not completely, I both agree and disagree with Martin about that point. I think it's an important point, but it's also not necessarily fully explanatory. Okay. So when you look at all of these things that are happening, you have to ask yourself, okay, well, if I'm a person with power, seeing the big picture, if I'm the head of JP Morgan Chase, if I'm the head of the Federal Reserve, if I'm, one of the cigar smoking club on Wall Street, I'm going, really? We're going to hand over the U.S. commercial banking might to a bunch of banana hammock wearing German communists? Really? Really? You think that? Powell, 5.5%. On it, boss. It's not tough. And then you watch City of London like lose their minds, but they couldn't pull that off. Again, going back to previous conversations, I've had, if we didn't implement SOFR and have a fully disengaged repo and dollar dollar pricing mechanism that was domestically focused as opposed to internationally focused, which is what we had under LIBOR. So
you also have the competition, and you're mentioning Russian politics here, which makes me think about the BRICS and also what just happened last week, the recent municipal forum that was held in Moscow on the 27th and 28th, I believe, BRICS. I actually didn't see much coverage of that online. Was that not important? Does that play a role into your view here?
The BRICS are setting up for their big summit in October, which will be held in Kazan, Russia. Interestingly enough, Turkey announced today that they're applying for BRICS membership.
Hmm.
That's a I'll do the Dr. Evil thing, right? That's a really interesting moment. I think Erdogan's doing that, or Erdogan's doing that for his own survival purposes. You can see what's happening here. The world is splitting into regions and blocks. And, my friend Vince Lanci and I have talked about this many times, that we're going to see the return of mercantilism. We can get down to gold. They're just setting up their parallel system or their separate system. And I don't really think that this is, I think, a failure on the part of a lot of analysts who assume that the United States is a rapacious entity that has world domination on its, or continued world domination on its to-do list. I think those are other people's plans. The United States doesn't talk in these terms. Some of our politicians do, and mostly the neoconservatives. Again, they map to whom? The British, who did what? Invented globalism. Like the globalism is an idea that goes back to the Milner Group and Cecil Rhodes and all those guys, going back into and all that stuff. So the reality is the United States has a lot of debt. We have a fiscal nightmare. We have an aging core population. We have a lot of things. Well, it's not as bad as it is in some other places, by the way. But we have a lot of demographic and economic things that have to be fixed. They are not unsolvable, folks. That's bullshit. That's gaslighting. Okay. The math is very clear. We can balance the books. Gold just needs to be a much higher freaking price. They'll destroy the dollar. Oh, really? Or will it destroy every other freaking currency first? If the United States decides to stop wasting money on globalism, which we probably spend $2 to $3 trillion a year on, grants, NGOs, USAID, blah, 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 the Defense Department, the Department of Energy, the Department of Education, the Ford Foundation, all the NGOs, the K Street think tanks, all this stuff. It's like $2 to $3 trillion a year. It's an enormous, insane amount of money. Hey, we don't need any of it. Most of that money goes overseas to do nefarious things that nobody actually wants, right? It's not actually money spent here in the United States. So it's not going to affect, quote unquote, GDP, even though GDP is a bullshit statistic because it's just gross national spending. We could cut GDP by that metric, we could cut GDP in the United States by 10%. And the American economy could literally not miss a dollar of it, because almost all of that money is spent somewhere else. So, hey, you want to pull back on the dollar? You want to de-internationalize the dollar a bit? You want to give up on the global reserve currency, which is a friggin' burden that even our Fed chairman has said it's kind of a burden that there's room in the world for more than one reserve currency. This came out of Jerome Powell's mouth during a Humphrey Hawkins testimony before he started raising it, or right after he started raising interest rates. Like, when have you ever heard the Federal Reserve Chair say that? Like, listen carefully to the words that come out of their mouths and then look at their actions, and you can see exactly what's happening. So are there factions that don't want to give this up? Of course. Those people are vandals. They work for Obama. Obama's a communist, and he hates America. This is not difficult. Put those 4 facts in your head, then run the Obama administration for the last 20 years, 16 years. Because he's been in charge for the last 16 years. He's even in charge under Trump. He ran a shadow government out of his Georgetown brownstone, for Christ's sake. And the entire administrative state listened to everything he said and didn't listen to a thing Trump said.
Hang on for a second here, Tom, because I found something interesting that you said before that I feel like we're going to go away from. But it was interesting. You said the debt issue can be solved. Gold just needs to be at another price. What is that? First of all, what does that mean? And what's that price that gold needs to be at?
Look, at the end of the day, gold is the collateral underneath. Gold and oil and cash flows and all this stuff are the collateral underneath the bond market. Gold, the Fed holds 8,133.5 tons of gold on its balance sheet, valued on the Fed's balance sheet at $11.04 billion. At current prices, 42.22 an ounce. At $2,500 an ounce, that number is a lot higher. I think it's close to $600 billion. Now it's 9% of the Fed's balance sheet at $7 trillion. Can it go to 20% of the Fed's balance sheet by doubling the price of gold? Could you raise the price of gold to $10,000 and make it 40% of the Fed's current balance sheet? Could the Fed pull another $1 trillion off the balance sheet? Now all of a sudden the gold reserves are 50% of the Fed's balance sheet. Now it's a different world. And you cut the spending, right? Servicing the debt. Okay, so Powell goes back to 4%. We're already got the U.S. 10 years at 3.9, for Christ's sake. Hey, Yellen, why don't you sell some bonds as opposed to selling 3-month T-bills at 5.4%? Why don't you sell some 10 years at 3.9? There's plenty of demand for them. Like, the world doesn't not want U.S. debt. What the world wants is for the U.S. to stop abusing people for buying their debt. So if we stop abusing people for buying our debt and we fix our fiscal house by, I don't know, taking Samantha Power and the entirety of USAID and junking it into the friggin' Atlantic Ocean, that's a good start. If that were to happen, $2 trillion would flow into the United States tomorrow in hard money inflows. Why? Because we know exactly, just like it's a dog whistle that Volkswagen is saying we're going to threaten to close, shut our automobile plant. So the CDU, you better get your fucking shit in order. It's the same thing here in the United States. Hey, Samantha Power, you're a fucking criminal. USAID has been terminated, and everybody's like, hallelujah, I can invest in the United States now. And you tell me that this debt problem is not solvable at 3.5% or 4%, especially if we start talking about Judy Shelton's ideas of doing, gold-backed tips. U.S. sells debt based and backed by Treasury gold, even if it's not 100% backed by gold. How about a hybrid instrument as opposed to what she's put forth? How about a hybrid instrument where you pay a 2% dollar coupon and a 5% and a 10% gold cover clause and redeem the bond for 10% of the face value in Treasury gold at the end? You'll allow the price of gold to rise, given your investors their 7, 8, 9% yield that they actually want. And you pay them only 2% out of the friggin' Treasury, and you fix the friggin' fiscal problem in the process. Hey, Bob's your uncle. You just solved a $35 trillion problem. I got news for you. The world would rejoice if we did this. And that money that we were still spending in Washington went to rebuild, the railroads and the bridges and the universities and the water treatment facilities and the roads and every other goddamn thing. And we got rid of all these friggin' managers and useless people stabbed at all these fucking universities that do nothing but destroy the culture and poison the kids' minds. Like, every one of these people should be fired. And they all are, in every way, manner, shape, or form, to the last fucking dollar, are these people funded by Pell Grants. And Pell Grants, we end Wokenistas running the fucking underwater basket weaving department over at the University of Georgia. Hell, at that point, the Georgian Republican Party is like, oh my God, we might actually have to start being Republicans again. That would be fun. Wouldn't that be novel?
But so wait,
it's not hard, guys. It just needs to be done.
If
the
we're
problem
talking
is that so one last thing, and I'll be happy to reply. I just need everybody to get it through their heads. The reason we believe these problems are insolvable is because they haven't been solved, because there's been nobody in fucking power that wants to solve them. They want to make them worse, because the whole point is to destroy the national government, destroy our faith in our institutions, and hand what's left of our faith in anything to a bunch of fucking shitbag globalists who just want to put us on make Minority Report with more goddamn Germans. It's not hard. It's not that tough. The math is all solvable. It's just differential equations and some bond math. We can do it. We got plenty of MBAs to work this shit out. Like, there's 18 different ways we can recapitalize the United States. And it just bothers me that really smart people in my corner of the world refuse to see this, because they're so angry about what the United States, what their country has become. And they're right to be angry about that. I'm angry about it.
I could tell.
But that doesn't mean that we don't still have solutions ahead of us if we're willing to actually actually attack the problems head on and call them for what they are, and stop pussyfooting around worrying about whether we're going to get deplatformed because, oh, we can't say that. We can't call them commies or we can't call them racist. Yes, we can. When you listen to the average Biden/Harris voter talk about how dumb black people are, that they can't figure out how to get a state ID, and then you watch an entire 20-minute video of a guy walking around Harlem saying, "Do you have ID?" And they're all like, "Duh, can't live in this world without an ID." You ever had a problem getting one? No. Like, it's all bullshit. It's all gaslighting and it's all crap created by evil freaking people to rob you of your reason and take all your money. That's it. It's not that tough.
Part of that calculation, though, would be, so getting the gold back tips. Part of that calculation would have to be a different price of gold. Like, we're talking about a completely different, like that. This is not $2,500 gold at all. Like, we're not even close to that.
No. What I'm saying, so yeah, embedded, go back to embedded and all that ranting. It's some very simple math. Well, I said earlier, let's take the hybrid argument that I just put forth, because maybe, you're not going to get anybody to go along with just a pure, hey, I'll lend you some money now for the promise 30 years from now you're going to hand me my face value of the bond in gold. That's going to be I wouldn't buy that bond. Would I buy a bond that paid me 2%? Would I buy a 10-year, US 10-year, paying me 1.5% in dollars and 10% of the face value at the end of the bond back in gold? Yes, because I know now that my government is incentivized to allow the price of gold to rise to keep me from selling the bond. They don't want me to resell that bond. They want me to hold it to maturity, or hold it until they fix their fiscal problem to the point where they can recall the bond and buy it back from me at par or at current price. And maybe they pay, maybe they pay 115% on the price, or 120% on the price. That's still better than paying out the treasury gold, right? But when you think of it that way, I'm getting 1.5 in dollars. Cool. I can pay my taxes with that, or I can pay some of my taxes with that. And then if they allow gold to rise 10, 15% a year, 15, 20% a year, right? And 10% so now I'm getting an extra yield on top of that 1.5%. Would I lend the government money under those circumstances? I mean, my numbers might not be right here, but the basic concept is still absolutely valid. Okay. And would the United States need to sell $35 trillion of this debt? No. They sell a couple of $1 trillion worth. I mean, or $1 trillion worth. They just roll them over, whatever they had to do. Like, it's doable. Shelton wrote a great article about this 12 years ago when she was at she's at Cato, I think. And she just outlined it in terms of it being like a tips. But this is basically the same thing. And the price of the bond will move up and down based on the price of inflation and a variety of other things. She's a brilliant idea. It's an absolutely brilliant idea. We may have to issue multiple types of instruments along these lines. But if we don't do this, then China and or Russia will. And once they remonetize gold in that way, we'll be forced to anyway. So you might as well get with the frickin' program. And that is explicitly what Europe and England do not want, because they do not have the collateral. They want to crash their system, renege on all their debt, renege on all their promises, renege on their pensions, and renege on all of it. Wipe the slate clean, pay out perpetual debt at 1% or whatever, and force the Russians in reparations after defeating them to pay for the rollover. And they need the Russians to do that because they need the collateral. They need the energy, and they need the titanium and the uranium and the nickel and the gold and the silver and the oil and the gas and the freaking titanium, all of it. They need it all. Okay. And they just need to go get it. And, it's all about collateral, folks. It always is, because they need to issue a new bond. after that. And the only way they're going to issue that new bond is if they've got access to cheap collateral to sell to the bondholders to make the bond good. And if they don't get the Russian oil and the Russian gas and the Russian nickel and the Russian titanium and uranium and tungsten and all this and the aluminum, they got nothing. They won't be able to do it. Europe enters a 500-year dark ages. 500 years. No problem. Well, at least 100 years. The rest of the world may actually survive so well that Europe is pulled out of it in only, a lifetime or two. But if we do it wrong, it's going to be a 500-year dark ages where everybody suffers because, we nuked half the planet. Really? You really think the guys on Wall Street want this? There's no rebuilding from that. There's no cash flow stream off of, tins of sardines and stashes of bullets. Like there's, you know what I mean? There's no bond equations to run on that. There are no cigars in that scenario. There's no whiskey. There's no nothing. Like, I just don't buy it. So someone is looking at this going, we're not doing that. The Russians understand exactly what the story is. They know exactly what to do. Putin's a student of history. He knows exactly what the British have done to Russia. He understands it all. He understands any sympathy he has for the USSR and Stalin. The more I think about it, again, Putin's version of Russian history is, it's a little spurious, but he's Russian and, he's a Russian patriot. Fine. But I can make the argument when you stop to think about it, that Stalin wound up having to do some of what he did, and then he went way too far, just like Hitler did what he did and went way too far. But he was set up and put in a bad situation and then wound up, going completely overboard, trying to root out the actual corruption that was staring him in the face because the British had surrounded the USSR. I mean, they fought wars for 20 years after the revolution. It's not like it happened overnight. I mean, Stalin wasn't done fighting internal wars, border wars in Russia for the USSR for 20 years? And my history on this is very, very fuzzy. It's this deep, folks. But you can make the argument that part of the reason why Stalin did what he did was to just basically root out all the people that, the British had inserted into Russia to continue keeping it destabilized in order to put their people in charge. And so I could make an argument. Again, I could make an argument. This is not something I believe. I could make the argument that the reason why Putin has a soft spot for Stalin is because he understands what Stalin did. And if that supposition and that argument is correct, then you can assume that Putin knows exactly what the British are trying to do to Russia today, and he's not going to let that happen. Meaning, you just run them out. You just run a war of attrition and run us out of money, and refuse to take the bait. And every time they, murder some children or blow up a bridge or whatever they do, it's awful, it's horrible, but he's just not going to give them what they want, which is new Kiev.
But he said no cigars and no whiskey, which probably means no Tom Luongo interviews anymore, and I don't find that fun at all. But would the price of gold not have to be fixed to make all that work? Because they'd allow to go 10 or 12 or 20% or whatever, but wouldn't the government be susceptible to those price swings, bringing the whole system in jeopardy in that case? Or like, how will that work?
I don't think so. I think that the higher the price of gold goes, everybody's fiscal position gets better. Okay. Anybody who holds gold, mind you. Canada doesn't own any gold. The Brits don't own any gold. Well, they own very little. I sold it all off. Brown's bottom. All right. But for the people who own gold, the people who are buying gold, no, it's their fiscal positions improve because their central banks are better capitalized. They've got gold. They've got collateral. They've got shit they can write bonds against. Right. And they've got cash flows. And if they're resource rich, then that's what they do. And so, that's the way I see it.
Okay.
There may be there's other versions of this story, but this is the one that I'm running with it at the moment. And again, this story gets more nuanced and a little deeper and a little more interesting, or maybe even a little crazier. I don't know. I don't profess to be right about any of this stuff. Like, I really don't. I profess to think that well, if this, then that. And here's a scenario for you. Why don't you think about this? Why don't we run this one out and see how long the hypothesis lasts? When I made the hypothesis about Powell and the 5 basis points to change the world back in June of 2021, I was in friggin' show me mode, like a good Missourian for 3 years. I still am. I'm still not convinced that there's not going to be a rug pull at some point and that Powell's not going to, or he could just make a mistake, or he could be forced into a move that he's not comfortable with, which is, I think, what's going to happen in 2 weeks. I think he wants to cut 25 basis points and he may have to cut 50. The market's screaming for 75. So they're still not going to be, they may not even be happy anyway. Right. But I would hope that Powell only cuts 25 basis points, because then what that tells me is that the U.S. economy is in the shitter, but it's not that bad. And that he rightly is looking at the state of things going, ooh, we have an opportunity here. Or there's some intense negotiations going on behind the scenes that we're not privy to that will determine the outcome of these policies, and we can't see them yet. And maybe we wind up with a 50 basis point cut, but maybe we also wind up with another move by the bank, intervention by the Bank of Japan to offset 25 basis points of it. Right. Nouriel Rubini came out of, his hole the other day, last month, to write a paper, probably the first time he was relevant since, 2009. And talking about how Janet Yellen has issued bills versus bonds because she was basically doing yield curve control. And, by his calculation, again, salt is to taste. I'm not saying Rubini's correct or not. I'm saying this is one version of reality. But in, Rubini's calculations, that she offset a full point's worth of Powell's rate hikes by her fiscal management. Right. Well, if that's the case, then we really have never seen the United States economy function at 5.5%. Or maybe she's just finally run out of room where she can continue to do that. And now we're finally starting to see what 5.5% really looks like. Okay. Well, in the same way that she's offset some of Powell's rate hikes by doing stealth QE, yield curve control, and all the Treasury QE and yield curve control, and all the rest of it, the Bank of Japan could offset Powell cutting or even not raising by intervening and strengthening the yen and pulling dollars off the market in another way. She's adding dollars to the market to offset his attempts to tighten. The BOJ is turning around and blowing up the yen carry trade in order to offset, what is coming from Powell, which is going to be rate cuts. And what you might wind up with is a liquidity level, which is exactly the same as where it is now at 5.5% Fed funds rate and 0.25% BOJ benchmark rate, with a yen trading around 146, 147. Well, what happens if Powell cuts by 50 basis points down to 5% and the Japanese raise another 25 basis points or even 10 basis points, but lowers the yen into the high 130s? What would the global liquidity position relative to dollars look like, is the argument I'm making. That's what you should be considering. And if the BOJ doesn't move and the Fed cuts, well, then we have a net increase in liquidity, dollar liquidity globally. But if one cuts and the other raises, then the whole liquidity level may come down. Okay. And stay the same, and then offset some of it, or not raise it very much. But I can tell you that, under those circumstances, housing market here in the United States is not as bad as people want it to be make it out to be. The commercial real estate market is terrible, and they could really use a 50 basis point cut. So maybe we'll see another move by the Bank of Japan. I don't know. Maybe the Bank of Japan has already shot their big wad for this, and they've already made their move to offset the 50 basis points that Powell's going to cut. Maybe that was the whole point of the exercise, right? I don't know. I put all these things out there for you to think about and for you to discuss, because that's why I'm here. I don't have the answers. What I have, or hopefully I'm asking the right questions to put into your head for you to consider, and then make some decisions based on that.
I think a lot of us, or all of us, who are over levered toward risk on equities are hoping for at least 50 basis points there. But what are you doing actually? So knowing all this, which is, well, obviously a very complicated web that it's impossible for us to entangle over an hour or so. But what do you do? What have you been doing with the portfolio recently? Gold still in there?
Sure.
What else?
My portfolio in both newsletters that I edit or publish are built along the same lines. You want to be in productive assets going forward. We're going to get another round of commodity inflation. We're going to get, we've got credit deflation. We're going to get another round of commodity inflation. So you want to be in hard assets. Oil is underpriced, like criminally underpriced. And so that's part of the reason why inflation is down. I think that's a political operation. I don't think oil should be trading below $85 a barrel. Goldman Sachs just came out today and said, I don't know what anybody else is saying, but we've got a real oil supply problem on the horizon. And I would agree with that. They've made oil uninvestable with the amount of volatility that's in the oil market. When oil moves 7%, 6.5% a week internally as a function of price, right? When the price range on a particular week in oil is 6.5% of the actual price of oil, that's too much. That's 3 times the volatility of gold. That's only 75% of the volatility of Bitcoin. Okay? Bitcoin's only like 9% of price, the range versus the price, right? The range low to high on a weekly basis. I mean, it's insane. And Bitcoin move and Bitcoin is being vol washed into oblivion. Silver is only 4.5% for Christ's sake, but oil is 6.5%. And the world is, and this is the thing that the whole world is supposed to be able to set its clock by, figure out what the price of it is in order to, do some input calculations to figure out how to build a business model the world over. And this shit's moving 6-7% a week. Are you kidding me? Like Donald Trump keeps talking about MAGA. I know I've just said this a billion times, but I'll say it again. He keeps talking about MAGA. RFK keeps talking about MAHA, make America healthy again. And I'm like, no, make oil investable again, and all this shit fixes itself. Like, we need Moya. And I'm not making a Farscape reference. So no, seriously, like it drives me up a wall. But as far as I'm concerned, this is all politically driven, because they've got to get the price of oil under control. They've got to get the wholesale price of gasoline under control, because in a commodity cost push inflation environment, the CPI tracks the friggin' wholesale price of gasoline in the United States. Like, I mean, it just does. Now, in a commodity cost push inflation environment, in a demand pull credit environment, there's no correlation. But in a commodity cost push inflationary environment, they're tied like 1-to-1 with a 4-month lag. Directionally, they're tied with a 4-month lag, and that's not going to change until the price of oil starts to rise and the wholesale price of gasoline starts to rise. So Kamala Harris is trying to run on, we fixed the economy, we got rid of inflation. That's what she's running on. She's running on that purely because someone is trying to win her the election by sitting on the price of oil. And Brent crude sitting at $60, $77 a barrel when it should be trading at 90.
Well,
okay.
That's more than I had hoped for. I thought you'd say you were 60% into bonds and 40% into Nvidia. I thought maybe that'd be the answer.
Well, no. So to give you an idea, I'm in tangible assets. I'm in gold. I'm in cash with, short-term treasuries of 5.25%. Dude, like seriously. And then, look, Antonio, personally, I don't have any money. I have very little money invested in capital markets, and I've said this many times because I don't trust myself to give good analysis if I've got that kind of skin in the game. I know myself well enough to know that I don't want to feel like I'm talking my book. It's bad enough that I recommend these things and I'm on record and I'm, making these recommendations to, my livelihood. And that's bad enough. Like psychologically for me, it's very, very, I don't want to sound like a guy constantly talking his book. Okay. That's not what I'm here to do. My book is a consequence of what I see. And I have shifted some of the portfolio around recently. I covered I'm no longer long Japanese equities. We made money in Japanese equities. Why should you be long in them right now? You should wait to see what's going to happen. The Japanese could, they've got room to maneuver to drop the price of Japanese equities if they want to, if necessary. But at the same time, right now, they're comfortable with the 10-year trading at 90 basis points. So maybe in 3 or 4 weeks or a month, it may, or, a month, 3 or 4 weeks or a month, 3 or 4 weeks or 3 or 4 months, it may be time to go long Japanese equities, but only when it technically says that it's ready to go. Right now, the bull market is at least on hold. We'll see what happens. That's just to give you one example. I still like productive land. I still think productive real estate was baby thrown out with the bathwater with all credit assets during the rate hikes. Fine. Well, if Powell's going to start cutting rates, where's the real estate investment money going to flow first? Farmland, timberland, right? Mining. That it's going to go there first because that's what people need. If we think that there's going to be any kind of a housing move, people need food, yada yada yada. If we're going to start trying to get the economy moving back and towards a credit demand pull environment, then the first place that the money's going to flow is going to be into productive land assets. Not all land, not commercial real estate, not telling people to buy muni bonds, right? Productive land. That's that, and that's also attractively taxed. And so those types of properties are generally, especially where they're held, because they're generally rural, are generally taxed really well. They're in advantageous tax structures, certainly in the U.S.
Good for you. Interesting moves. I always appreciate those updates, specifically on your own portfolio. We have been talking for over an hour here. I think about an hour and a half, including before we started recording, which is a lot of fun. We should have recorded that too.
Which we should have recorded, yeah.
We're talking about topographies of the U.S. and stuff like that. It was interesting. It's for people listening, it's TFL1728 on sounded like a phone number for some reason, but that's Tom's.
Yeah, it does actually. And that would be an old phone. Actually, that would be an old phone number, right? It would be like Wabash A2703 or whatever. That's the way it used to. That's the way we used to, right? But
it's not a phone number. That's Tom's Twitter account. You can go follow him over there, or tomluongo.me for ME for more of his written stuff. Tom, I don't want to keep you all day, so thank you so much for doing this. What am I forgetting to ask you though here at the end? What should we be talking about?
What should we be talking about? We should be talking about whether or not we're ever going to get back to any form of democratic organization politically, because right now we are not living in democratic times. So we are living in anti-democratic times all the way across the board. Everything I said at the outset about the German elections, that's all. None of it is democratic. Like those are the easiest. This should have been the easiest elections to handicap. Oh, look, AfD won. They should partner with CDU, form a 60% government, and move on with their lives. Is that going to happen? No. I had to write 1,500 words this afternoon to explain to people exactly why that wasn't going to happen. We have the same problem here in the United States. We have the same issue in the UK. We have the same issue all over Europe. And these are systems that purport to be democratic at their in structure, but are actually anti-democratic when you dig into the nuts and bolts of how they actually operate. So I don't know that I'm no fan of democracy. I'm still an anarchist, but people should have the ability to express themselves. And so we either are going, if they're not going to give us our democratic head, then the thing we should be talking about is how quickly are people going to embrace decentralization? Because that's your antidote for anti-democratic systems like what we have coming out of Davos and the EU and Washington and all the rest of them.
I think an episode on free market capitalism or the lack thereof would actually be interesting. We could make a whole podcast program out of that, actually. So,
yeah. Do you have 4 hours?
I do. I have 8 hours.
But you, my friend, are the one that is 6 hours behind me, and the sun's going down where I am. So this is way late for you. You should get going.
Yeah, you're right. And I also have 2 more interviews to go through. So I should indeed get going, although I do enjoy talking to you. And thank you again, Tom, for doing this. I'll let you drop off now, as I'll be moving to my favorite part of this Real Money Talks episode. And that is, of course, the CEO barbecue, but not before my absolute favorite part, which is the disclaimer for the CEO barbecue. There's a warning on your screen right now. You're obligated to read it, but you're also probably better off doing it, because this is not just some disclaimer. It is an actual warning. The norm and the expectation in the sector should be losing money. So if you don't like doing that, consider reading what's on your screen right now. That's also, by the way, part of it. I am here to make money. I make money from the existence of this channel, and specifically from companies paying for the production of these interviews. Thesis Gold, the first company we're going to hear from here today, is a paying client of Research Talks. So you should look at this episode and every other episode that we publish, even for the companies that are not paying to be featured or for the production of their interviews. You should still look at everything as marketing. Start by understanding that all company communications online or wherever it might be, real life too, if you meet them at a conference, whatever it might be, interviews, presentations, Twitter accounts, everything is marketing. And although I don't make bias or recommendation, because there's a clear conflict of interest in my opinion, many out there do, and you should be aware of that inherent bias. It really does happen a lot. So anytime you're watching any type of company-specific content, approach it with a dose of skepticism and treat it as marketing. Nobody's a magician. Well, maybe some people are magicians. I don't know. I definitely am not one, though, unfortunately. The guests are not magicians, and the CEOs are, most of them are normal people. So we don't possess any superior knowledge about what will go up and what will go down or what's going to go in circles, right? So there's going to be no guarantees made here besides really only one, and that is that there will be forward-looking statements in these conversations. They are conversations that are general and impersonal in nature, containing hopes for the future that may or may not take place, depending on many different factors, both within and outside of the company's control. Be aware of that. Be aware of the inherent risk to investing. Investing is risky, and the increased risk of investing in non-revenue generating companies that operate in the harsh reality of the mining business. And please talk to someone who's proven to know what they're doing and talking about, like a professional investment advisor, as well as do more research before taking any decisions in the end by visiting setterplus.ca, where you're going to find the company's official filings. If you don't do that, you're highly likely to lose your money. Again, disclaimers on your screen right now, different disclaimers. If you don't if you want to try and protect yourself against losing money, read them and be careful out there. With all that said, though, I am actually going to be shutting up now. Well, almost, at least, because I'm going to BC again for yet another update on Thesis Gold. No fancy 10-minute intro here, though, because I've done probably a half a dozen interviews with Ewan at this point, and I'm also just rushing to talk to you here, Ewan, because you've published your updated PEA for the combined project now. So this includes your lawyers and ranch project, 2 different projects close to each other, of course. But the headline says that at $1,930 gold price, the after-tax NPV 5 is $1.3 billion. There's an over 35% IRR for the 14-year mine life and a 2-year payback period for the 600 million Canadian dollars initial capex. So essentially, this is giving us about a 2-to-1 NPV to capex ratio, actually better than 2-to-1, a little bit better. Again, though, this is at a 5% discount. So I do want to talk about that discount there later on. And there's also a 4.5 stripping ratio. So lower than last time, not the lowest, though. So I also hope we can talk about that. And this is hot off the press, basically. So I'm not as prepared as I would like to be. So I'm going to have to lean on to you here. What do you make of this? Is this what you had expected? Are you happy? What are you seeing? Talk to me.
Yeah, I mean, I think this is huge for the company. This is arguably better than we were anticipating, to be honest. And it's been a year in the making. So it's nice to finally deliver it to the market to demonstrate how good this project actually is. And I mean, I think it was probably about a year ago at this time we sat down and, we identified the opportunity that existed between bringing the two projects together, put a very strategic plan in place. We've executed on that. There's been a number of deliverables from the drill program last year to a new updated resource to new metallurgy. And really, this is the kind of crowning piece to that 1 year plan where we've, delivered on time, on budget. And as I said, I think this is transformative for the company. It's a phenomenal success. And I think really establishes the Lawyers Ranch project as one of the top development assets in North America.
Yeah, you don't need to remind me that you've built a $1.3 billion asset in a year where I just basically made a couple of videos. That doesn't make me feel too good about myself. But since we've been talking, I went back and listened to some of these conversations that we had, and it seems like continuity was a recurring topic. It was a question that always came up that we kind of followed since you started working at it, and you've now managed to improve it a lot. Again, I suppose you're happy with how that's developed. Is there more room for improvement in terms of continuity? Why I'm bringing it up is because of the type of system that you're dealing with. Geologically, continuity could be an issue. What are you seeing here?
I mean, well, I guess there's two different types of systems. At Lawyers, we have a low sulfidation epithermal system, and then at Ranch, we have a high sulfidation epithermal system. So to look at Lawyers alone at first, in fact, let me step back. Globally, we've got 4.7 million ounces, and 4 million ounces of that is in the measured and indicated categories. So at least on 25-meter centers, the drill spacing. So there's a ton of confidence in that resource. Now, just looking at Lawyers, I mean, basically, the vast majority of Lawyers is M&I, and we've been working on that project for the last 6 years, and there's a lot of confidence there. I mean, the continuity in Ranch is not an issue at all. It's very predictable. The drilling we've been doing this summer is heading as expected. It's a very simple system, let's say. Now, if we look at Ranch, a bit of a different beast. It's a large, structurally controlled epithermal field with multiple structures that control mineralization and different orientations. And that is definitely more challenging, no doubt about it. But I think we've got a really good handle on that structural model now, where to target, what to expect from that drilling as well. So I think with time, Ranch will evolve into something bigger, and the continuity will continue to improve. At Lawyers, we have a fantastic handle on it. And like I said, 4 million of the 4.7 is measured and indicated. So I don't think that is an issue in the slightest.
Well, I'm asking this because this includes, this combined PA includes both open pit and underground mining as a whole in the mine plan, I suppose. Do you expect any challenges relating to continuity or otherwise so when transitioning between these two methods? Because at some point during the mine life, this 14-year LOM that you've outlined, you're going to have to transition from digging it out of in an open pit setting to taking it out in an underground setting. Should you expect any additional continuity related issues?
I don't think so, and it's a very good question, and it's maybe not mentioned in the press release, but the underground mining and the open pit mining will basically occur in tandem. I think at the moment, okay, the underground mining basically starts year 2. So while we're mining at Duke's Ridge and Cliff Creek underground, we'll also be mining in the open pit above. And as you mentioned earlier, the strip ratio improved from the previous resource in PEA, and that's because the base of the pit is essentially come up quite a bit, which has reduced the strip ratio to accommodate the underground mining. Just the higher grade, getting that to the plant earlier is important for the economics. So both of those will happen in tandem. Don't foresee any issues with continuity associated with that.
I do want to talk about the strip ratio as well, just later on. I'm making a note not to forget it. But recoveries, you're working with, it's now a 93% gold recovery. Silver recovery is kind of, I think they dropped. I think, what are you doing? 86.1. It used to be what, 88? Or am I mistaken?
So in the new metallurgical work we put out earlier this year. It was 95% for gold, I think, and 92% for silver. And those numbers have changed a little bit. And that's just that occurs because of the way that we're recovering the ore. I mean, that was purely looking at flotation. And this processing facility that we'll have the optionality of flotation or just cyanide. So the recoveries change a little bit depending on where the ore is coming from and what process that it goes through in the mill, basically.
So what do you have? Do you have to do some kind of a stress test or something where you run both flotation and leaching at the same time to confirm this, or are you done with testing?
But no, there'll be new testing. But I mean, there's been a lot of metallurgical work completed on these projects. And you mentioned earlier, you know, they're different beasts essentially. But there's no problem with these two projects working together and demonstrating that the recoveries are fantastic, regardless of what the style of mineralization is. It's more a case of depending on the sulfur content of the ore, whether it reports to flotation or whether it reports to leach. And I think it ends up being about 65% doré on site, which is mostly a result of the leaching, and then about 35% reports to concentrate.
Right. But you don't expect recoveries to drop any further once you move into a PFS scenario, like 93% gold and 86.1% silver. That sounds reasonable for the actual mining scenario.
Yeah, I think so. I mean, there might be little tweaks here and there, but I don't see any considerable change. I mean, as I said, we've done a lot of metallurgical work now on both projects and looking at composites across both as well. And I think, you know, we're confident in these numbers and the ability of these two systems to work together.
The PEA also hints at potential pre-concentration. So essentially, what ore sorting, I suppose, which is a very big, scary word to a small brain like mine. So talk to me more about that. How do you envision that working out?
I think, yeah, this is for future upside potential. And I don't think we really have any vision of utilizing this technology on the Lawyers project. But at Ranch, the mineralized zones are visually very distinct. And I think there's opportunity there to basically upgrade the ore that we're trucking to the kind of centralized milling facility that will be on the Lawyers project. And if we, with the ability to do that, you know, you're effectively reducing waste and improving grade. And there's a lot of efficiencies to be had from doing that. And we've been working with a group at determining how viable that is. And we're not quite at the point where we can introduce it into the PEA yet, but I think it is definitely an option going forward.
You're reminding me of something else that I have to ask you, and that's managing these, because it's essentially two projects at the same time. I do want to ask a question about that later on. Tailings and waste rock management, though, first. Now, maybe even more crucial these days. Well, I don't know if it's on the province level or not, but based on what's happening in the Yukon, way far away from me, I understand. But still, I assume we're going to see some more tightening over time. Has anything changed in how you want to manage waste and tailings?
No, not at the moment. I mean, the fortunate thing that we have is that topography really works in our favor. So there's a number of different options that we have for potential tailings sites. The one that's currently selected is capable of accommodating all of the tailings from both projects, with some capacity still in there as well. But there's a lot of other options if we continue to increase the size of the mine. In terms of the you know, how that relates to what's going on in the Yukon, I don't think there's any direct impact on us at the moment. I think we just continue to proceed as is.
I also want to talk about permitting as well. So it seems like we're going to be talking for a couple of hours, but basically what I'm saying here, strip ratio looks high in the surface. Combined for the two projects, that's 4.5, as I mentioned. It's so big improvement from the previous one, which was 5.9. But is there a risk it ever goes back up there? Is there anything you can do to improve it? Maybe this from I don't know, geological drilling or anything else between now and FID?
I mean, At lawyers, there's the only way we could improve it would be to move the kind of crown pillar between the open pit and the underground would be move up again to increase the underground mining component. And we've we've done a whole bunch of trade-off studies looking at the optimal position to transition. And I don't think that's really going to change going forward. So I think the strip ratio and is pretty set, lawyers. And we've done so much drilling there that, there's not a lot of optimization to be done. I think you've seen the result of the optimization in this study. As you said, we've come from 5.9 down to 4.5. At Ranch, I mean, that's really where the opportunity exists to improve a strip ratio as we add additional ounces and target near surface higher grade mineralization.
Well, that's a good point, because I've also been thinking about grade dilution for the underground portion. Are there any structural features, faults, fractures, whatever that could challenge the stability of the stopes? Because this is long hole stoping that you want to do for the underground. So is there anything that could challenge the stability of the stopes or increase dilution unexpectedly?
I don't think so. I mean, we're very fortunate in that the host rock's extremely competent, and we're effectively targeting the faults when we're doing the underground mining, because in the right at the fault contact is typically where we find the highest grade mineralization, and then this stope would extend out from that fault into what is called the hanging wall, and then extend along parallel to the structures. And we have a very robust structural model. We understand where the major faults are, and the stopes have been designed around us meticulously. So I don't see any major problems there going forward.
Yeah, well, I obviously thought using my brain power, I'd come up with something you had never thought about. What else? What is that? Oh, what water management? Any hydrogeological risks or work that you'll be doing to deal with any potential risks relating to the water?
I mean, we're fortunate in the sense that because the project's all in a subalpine to alpine, there's no major river systems on the in and around the deposits. There's no major lakes, and which is fantastic, because there's no fish bearing streams around where the immediate deposit is. All of that just makes things a little easier. On top of that, the Lawyers project is non-acid bearing. There's very little sulfide in it, and given that it makes up 4 million of the 4.7 million ounces, that's excellent. And on top of that, we've been collecting baseline data at Lawyers for over 2 years now, so we have a fantastic data set to demonstrate that is what the natural baseline is around the project. And at Ranch, we're into the second year and be concluding that in mid to 2025, and most of the work is now done for that as well. And the same goes for Ranch. I mean, there's no large water bodies or river systems nearby, so very fortunate in that sense.
You're by far not, so this 14-year mine life, that's by far not including all the gold that's there. There's more that you could over time, I suppose, bring into the mining plan. What percentage of the ounces in the PEA would you guess are going to go into a PFS? Like, do you think it's going to be less or more than what we're going to see in the PFS than what we're seeing in the PEA?
It will probably go down a little bit. I mean, I think that's only natural and it's pretty typical. But if, we're fortunate in the sense that if we think about the resource, we have 4.7 million ounces. That ended up being 3 million mineable ounces, which is a really good conversion. But I think, as you said, there's the opportunity there to bring other zones in if we continue to do work on them, on both the Lawyers project and the Ranch project. They just don't have enough drill density yet to be incorporated into the PEA. In addition to that, obviously, we're working on testing a number of new targets as well. So very much this is kind of like a base case scenario in my mind. And I know that we've talked about this before, and I still truly believe that. I think there's a ton of potential on the project to continue increasing the mine life and growing the ounces that we have.
I want to talk about exploration upside, because you're doing a lot of that this year. You have some money now as well. Having seen this though, so this PEA kind of sounds to me, based on all these variables that we went through, a lot of them were kind of question marks before. We're kind of like a wait and see approach that we did in previous conversations. This now seems or sounds very set on most of these things. Looking at it, even that you're seeing it now, do do you want to build this? Like, do you want to be the guy who builds this mine, or do you think now is the time where you go out there and you seek a partner, or you seek someone to get it off your hands?
I mean, it's a great question, and people ask me this all the time. I think, at the moment we're proceeding with moving this towards production. And I think that's how we unlock the most value for shareholders. And whether we build it or somebody else does, that is kind of a question that'll be addressed at the time when it needs to be. But from my perspective, I think we're in a fortunate position in that we have a phenomenal economic project that is very viable to actually build. We're going to continue moving the project through the permitting process to continue de-risking it with a PFS as well and towards feasibility. But at the same time, I want to, we really have the opportunity here to keep this exciting, if you will, by testing a range of new targets, trying to make discoveries, demonstrating what the upside is. So really kind of moving the project forward in tandem with the de-risking aspect and moving it towards production, but at the same time, demonstrating really what the upside is here. And, somewhere along that pathway, if an opportunity exists for somebody else to build it, we'll evaluate that at the time, and really just try and do what's best for our shareholders.
Financing will be a huge part of determining what's going to be best for shareholders, right? Because at this market cap, it sounds tough to do it. You're also running this, by the way, at an MPV 5, as I mentioned. I know that's what everyone else is doing. It's the industry standard. So you'd be shooting yourself in the foot to do it at another cost. But I mean, 5% doesn't sound like a reasonable cost in this rate environment to build a project of this size. You're probably going to have sensitivity analysis in there, though, to see what the value is at different percentages. Do you still, I mean, would you still be happy with building this at, say, 10%?
I don't know what that number is off the top of my head, but what I can say is that if you look, we're using 1930 gold and 24 silver, and if you look at the spot prices today of somewhere around 2,500 and $29-30 silver, the economics on it improve again materially to something like 64% IRR and 3.2 billion pre-tax, after tax 49%, and just over 2 billion NPV 5. So it's a very, very strong project that I think could accommodate increases in the NPV.
Still, though, I mean, looking at the MPV 5, when I say $1.3 billion, it's your market cap is just a fraction of that. And I suppose the Lassonde curve does not forgive anyone. So I suppose that's kind of how it is. Like you're a development story right now, or it's seen as a development story, but not quite. I mean, you just raised a lot of capital with $20 million. You're drilling 10,000 meters this year. So are you still going to keep up the exploration excitement? Are you going to, try and make new discoveries, try and add on, as you said, to the different zones? What is this drilling going to do for you?
Twofold, really. I mean, one, at Lawyers, most of the drilling is actually focused on those inferred ounces, and we're looking to convert some of those critical ounces that will have a material impact on let's say, the first 5 years of mining and the PFS. So converting some inferred ounces to measured and indicated. And then at Ranch, really the focus was on testing new targets, expanding the mineralization that we have there. And not really anything to do with upgrading the resource, but demonstrating how big, what the potential is here. So I think, we keep moving down the path of testing new targets, trying to make discoveries, and stepping out on the mineralization that we have.
You're the 10,000 meters, though, as I said, right?
Yeah, that's correct.
How is that
each project, approximately?
What's that?
It's about 5,000 meters. It works out to about 5,000 meters in each project. And a couple of thousand meters of that at Ranch actually is geotechnical drilling that we need to do in order for it to be included in the PFS.
And it's different to manage, though, I assume, as well, because you have the money to do a whole lot more drilling, but does it really make sense business wise? Like business wise, I suppose I've never developed a mine, but business wise, for me, it would make sense if you go and get environmental permitting, which I also want to ask you about, and look for partners or potential financial packages and whatnot, and just kind of forget exploration drilling. But that's not what the market wants you to do. So how do you manage that? And why 5,000 meters? Why not do 25,000 meters of exploration drilling? Just, step out.
It is tricky. And I think, a lot of companies right now are really not being rewarded for putting out fantastic drill results. I mean, there's a few exceptions to that, sure. But I don't want to spend $50 to get $10 in return. If I went and spent $20 million on a significant exploration program, and that, we might have some fantastic results, we might make some discoveries, but is it really going to move the needle? I have to weigh up those decisions constantly, and I think we're fortunate that we have the capital to execute on a program this year where it's meeting two objectives for us. It's upgrading ounces that we need to, and it is also testing a range of new targets at Ranch, which we can do, with a relatively small program, cost effectively, but continue to demonstrate what the potential is on the project. So it definitely weighs on me, and it's something that we consider as a team with the board, what the best ratio of drilling and the style of drilling that we're doing is.
And there are 20 of them, right? I mean, you mentioned that there are 20 undrilled gold showings, I believe, in that news release that you want to drill at Ranch. How do you prioritize? Do you want to drill all of them, all 20 of them?
I think at some point, yeah, I mean, they'll all be tested, and really they're just prioritized based on a number of different things. I mean, on the project, we've been very diligent about making sure that we capture as much geological data as possible at the same time as doing all of our drilling, exploration data in terms of, ground, soil geochemistry, rock geochem, detailed geological mapping, ground and airborne geophysics. And if these targets, the more boxes they tick where they have anomalies, then the higher ranked they are. And really that kind of determines what our real priorities are for the season. This year we've tested 4 new targets, and visually the alteration looks very encouraging. So we'll see how that plays out.
What's the timeline on that work?
I think we should start getting drill results back pretty soon, and likely have the first drill results out to market probably later in September.
Okay. So probably not. I mean, those are probably not deeper holes yet, because I think you're open at depth, right?
Yeah, both projects are open at depth.
Yeah, exactly.
Cliff Creek, Duke's Ridge, they're open at depth. And then at Ranch, basically all the mineralized systems there are open. So really the objective is to test near surface targets that will potentially move the needle.
Okay. Yeah. So results by the end of September. What else? What comes after that? What kind of news flow do you have for the rest of the year?
So it's from here, obviously this is a huge milestone for the company, but now we're as we look forward to the next 12 months, I think what you'll see is drill results through the fall. We're looking to begin the EA process next year in January, February time, Q1, maybe early Q2, and then we're working on, or we will begin very soon working on the PFS. All of the ground-based work that needs to be completed for the PFS is happening right now in the field, and that will feed into the desktop exercise. And I think we're at kind of late 2025 for the PFS at the moment.
Oh, late. So H2 2025. That's because that's what I was going to ask you. Good. Well, so that's again, about a year from now, I suppose, a year and a couple of months from now is when you want to have the PFS.
Exactly.
So you're not going on vacation to celebrate this PEA?
No, I'm going to be doing a lot of marketing to, really get the message out and demonstrate how good a project we actually have here. And I think it's fallen off a few people's radar, but I'm sure these results are going to bring it back to front and center.
What are you doing for marketing? You're going to Beaver Creek, I assume, but everyone else is. What else are you doing?
So yeah, Beaver Creek and then Denver Gold Show on the back of that. And then I'm heading to Asia for a number of conferences and to meet with some of our major shareholders. And then I'll be through Europe in November as well. And then in conjunction with in-person marketing, also obviously still doing quite a bit of online digital marketing at the same time and interviews as well.
Yeah, yeah. Unfortunately for you, one of those is with me. Asia, interesting. Is there demand for BC gold projects in Asia?
I think there is, yeah, and there's select pockets of Asia where there's capital that's looking to be deployed. Hong Kong, a lot of Hong Kong's some of that money's moved to Singapore. We're going to Singapore as well, and I've found that those areas can be very rewarding.
Well, that's interesting. I wouldn't have necessarily expected it. Good. What about I think last time we speculated because you had a new board member at the time, in Bill Little. Well, you didn't speculate. I speculated about his involvement. Any developments there? Anything more that you can tell me?
Bill's been fantastic on the board as non-exec chair. He's been kind of instrumental in helping advance the PEA as well. And he had his first visit up to site this summer. Resoundingly positive remarks. He's obviously basically building B2's Goose project at the moment that they got from Sabina. And, I think his general comments on the project that we have when he was at site were spatially this would work very well. I don't see any major challenges here. And with the economics that we now have, I'm sure he believes that this will be a mine. Whether we build it or somebody else does, I think that's the question.
Yeah, that's a question that I'll keep asking you till the day you sell or build these things, and every time you come on. In the meantime, you're doing also environmental paperwork, I assume. EAC you're doing soon, or when do you have to get that?
So as I said, I think the initial project description will probably be submitted early Q2 next year, and we look to get the final submission in the second half of 2027, and with that work completed 2028, basically.
Do you expect any delays or challenges again based on how the world's kind of developing? BC is also changing. I mean, it's not only the Yukon, whatever's happened there, but BC itself has also changed over time. Is that changing your environmental permitting in any way?
I don't think so. I mean, from our perspective, we've been, working with our First Nations members from the very beginning. We have a fantastic relationship with all four nations. They've been intimately involved in the design of the baseline study as well. And I think we've got a very strong foundation there. And I'm sure they're going to be intimately involved in the process as it continues forward. And so I don't think that's really going to change for us. I think we're in a very good position. And on time at the moment, there's obviously a number of things that are out of our control. But until we get any guidance from the government or elsewhere, then we're going to assume that we're on track for that 2028.
Good. Why I'm asking, and I know you're fine with your First Nation, but why I ask you that is because it's getting real, right? It's getting to a point where this is no longer a thesis, pun intended. It's a real project, right? So, but you're telling me that their sentiment toward the project and it eventually becoming a mine hasn't changed.
No, I don't think so. Very much so. I think this is a buildable project. We have support, and I don't see that changing going forward.
Good. Last question. Are you going to change the name from Thesis to Fact Gold or something like that?
maybe Thesis gold and silver. I mean, we've got
Hmm.
56 million ounces of mineable silver. I think it's, I don't know, that my number might not be quite correct, but it's something like that. And we're mining about 4 million ounces of silver a year. And, if you looked at this project as a standalone silver asset, it would probably still be in the kind of top 25 projects
Hmm.
that are just mining silver. So I think the silver needs to get some credit. So that might be the name change.
Well, good point, actually, because if I were a silver royalty company, I might look at it that way. Has anyone approached you? Do you think there's a possibility for you to do a silver stream or something like that?
I think that's a possibility for sure. And it's a good point that you bring up actually, because the project itself, we're probably one of the very few companies that doesn't have a major invested in it. There's a 2% NSR on the ranch project, but only a 0.5% NSR on lawyers. And, obviously with such a huge silver component, as you said, there's the ability to look at potential streams going forward. And I guess my point with this is that the project is not encumbered by anything really at the moment. And that gives us a lot of flexibility going forward as we near that mine decision. And obviously that's many years out, but my take, I wouldn't be interested in doing anything like that anytime soon because I think we need that flexibility come construction decision.
Hmm. Good. Well, Ian, this has been a good overview again. I'll let you do your thing. I imagine you're very busy right now. So thank you for the overview. What am I forgetting to ask you though? What did you come here hoping to talk about that I'm failing to bring up?
I think if you look at what we've produced here, the new economics on this project, and you look at the 2022 PEA, no matter what aspect of that you look at, the project has improved substantially. The mineable ounces has increased from 2 to 3 million, huge increase. The production, we're up at 215,000 ounces a year, gold equivalent, with the first few years probably closer to 273,000 ounces. The economics are fantastic, and it's a very simple project with relatively straightforward metallurgy in a fantastic jurisdiction. And there's not a lot of those projects out there. So maybe I'll leave it at that. But I think it's come a very long way, and all credit to the team as well. I think we've really delivered on what we said we were going to do a year ago, and we've got big plans for the remainder of 2024 and 2025.
Right. Well, I'll be there to ask you more annoying questions, I suppose, over that period as you're doing that work in 2024, 2025. But I'll let you drop off now. I'll let you get to the actual important meetings that I assume you have lined up, Ewan. Also, because I'll be moving on to the second CEO barbecue for this week's Real Money Talks by taking a trip to Newfoundland. But unfortunately, it's not going to be to look at colorful houses or Viking settlements, and I won't even be fishing. I'm actually going to be looking for gold and copper with the help of Stephen Stairs, the CEO of Benton Resources. Companies listed as BEX, so that will be BEX on the TSX-V in Canada, where an average of about 120,000 shares trade each day, with a 52-week high of 22.5 cents and a 52-week low of 4.5 cents. With a market cap of about $15 million and roughly 190 million shares outstanding, today this is an 8-cent stock. Their last MD&A shows me 8.6 million options outstanding, exercisable at prices ranging from 12 to 20 cents, and expiry dates ranging from June of this year to December of 2028. There were also 16.5 million warrants outstanding, with the last MD&A exercisable at 25 cents per share and mostly expiring in 2024. Eric Sprott owns about 17% of the company, and Spruce Ridge Resources owns about 8% of the outstanding shares as well. We'll talk about insider ownership here in a minute. The last officially filed financial statement, which is dated March 31st, shows me $2.5 million in current assets, almost half of which, that was $1.1 million to be specific at the time, was held in the form of what the report calls temporary investments, and specifically those are money market mutual funds, which were restricted for flow-through purposes. So essentially, this is exploration money, while cold hard cash on the balance sheet sat at around $200,000. There wasn't any long-term debt recorded at the time, and the liability side of the balance sheet shows me about $750,000 worth of current liabilities, a good chunk of which, so that will be about a third in the form of deferred premium or flow through shares, and almost 2/3 in account payables and accrued liabilities. It is worth noting, though, that since the publication of this report, again, it was at the end of March, the company has raised some more money. They raised over $3.5 million worth of flow through money, which has added some exploration cash to the balance sheet as well. But it also, of course, it added 22 million shares and about 11 million warrants. In terms of corporate expenses, the same financial statement shows me that when excluding share-based compensation, of course, Benton spent about $110,000 per month on average on what I would call administrative expenses, with G&A itself representing about 60% of that spend, and marketing representing over a quarter, so 27% to be specific, with various smaller expenses like professional and consulting fees making up the rest of the spend. As to the exploration expenditures, those get capitalized at Benton, as you have to go to note 8 to figure out, that's note 8 of their financial statements for that specific breakdown, which showed me that Benton spent a total of $2.8 million between June of last year and March of this year, which is a 9-month period. And so that equates to an average of about $310,000 per month on exploration and evaluation, with diamond drilling itself representing about 65% of that total spent, and assaying, soil sampling, geophysics, and trenching, stuff like that, representing virtually all of the rest, with the addition of a few smaller expenses like line cutting and so on. And of course, as always, please understand that this financial statement is nothing more than a snapshot in time. In this case, it was specifically at the end of March of this year, and it really simply shows you what the finances look like on that exact date and nothing more. Finances, of course, especially non-revenue generating companies, are a fluid thing, and I could also be making mistakes in my reading of them. So by the time you're watching this, please head over to the company's website to look at the most up-to-date numbers yourself. Make sure you're getting the full picture, and also consider using setterplus.ca. That's where you'll find the official filings. For Benton, that full picture is set in Newfoundland, with the flagship asset, Great Burn, it's called, being located in central Newfoundland and hosting multiple targets, with 6 known historically explored zones over a 15-kilometer span, and 2 NI 43-101 compliant MREs, with one of them housing 53 million pounds of contained copper in the indicated category. That is at an average grade of 3.2% copper, and 28.4 million pounds of contained copper in the inferred category, and that is at a 2.3% average grade. And then the other deposit that's to the north, that South Pond, housing almost 10 million pounds of contained copper equivalent. The EQ is important here, with a copper EQ grade of 2.1% and 5.7 million pounds of contained copper equivalent, again, in the inferred category at a CU EQ grade of 1.8%. Equivalent, by the way, because the resource at South Pond also holds gold, and potentially some other stuff, but we'll talk about that later on. The location might already be giving it away, but this project is part of the Appalachian origin belt, I suppose, and it's located in close proximity to the town of Springdale. The grades might also already be giving some stuff away, but we are indeed talking about a VMS deposit, in this case specifically a Beshi-type VMS deposit, primarily composed of copper and gold mineralization, but again, potentially some other stuff as well, like zinc and cobalt. Again, we'll talk about that. More specifically, this is a copper-dominated mineralization that is hosted within mafic volcanic rocks, though, and it consists of a series of stratabound sulfide lenses, the lenses being the interesting part, because I also want to talk about the geometry of the ore body. And why I'm telling you all of that is because that should be telling you that that the company's expectation really is for more copper and gold, so they're not stopping at this MRE. And there are a number of untested conductors that show up on the EM that Benton wants to drill, with a 10 to 15,000 meter drill program currently underway. So hopefully we can get an update on how that planning is going and how that work is going on right now. And next to this project in Newfoundland, Benton also holds a lithium spinout, which is currently underway, with a $2 million seed financing just having been completed by Piedmont Lithium. And that happened at $1 per share. So there will be some work going on the lithium properties as well this year. And again, hopefully we can get an update on that as well from Stephen here. I'm not going to go too much in depth on the lithium, though, because Stephen, this is your first time on the CEO Barbecue. So really, before we can talk about the specifics, we'll have to go through the obligatory annoying questions, as I like saying. Starting off with a fan favorite: who are you and why should I trust you with my money?
Well, I'm a seasoned exploration. I'm not a geologist. I'm a prospector by trade. I started my career with Noranda Mining, 8 years in the field with those guys. Basically, learned everything I could about geology and geophysics. Spent many, many times in a prospector tent, 40 below weather with myself and my brother. Uh, Digging out a floor and spending 2 to 3 or 4 weeks in a tent with a wood stove, line cutting and geophysical surveys for various exploration companies, mostly larger ones. And in 2004, I was good friends with a guy by the name of Ewan Downey, who is a very successful explorationist as well. Him and I both ran exploration services companies. He took Wolf Den Resources public, and then shortly after helped me and my brother bring Benton public in 2005. So the company has been around a long time. We've not ever done a rollback. We've never ever claimed bankruptcy. We've spun out many assets to our shareholders. One in particular, we spun out 57 million shares of Coral Mining Corp, which had a excellent porphyry project in Argentina. Unfortunately, the government, changed some rules, and that project was no longer viable for us. But they recreated themselves and now called Maramaki Copper, and they own a couple beautiful projects in Chile. So our shareholders became fairly substantial shareholders. We dividend all those shares to our shareholders at that time. We've also spun out a company called All Set Energy, which was in a company called Benton Capital, which was also spun out of Benton. That company now is called Silver Valley Resources. They have lithium asset in Mexico. Line before lithium was sexy, a bunch of salars, and I think some silver assets in Idaho. So we've been around a long time. We've got a great reputation in the industry. 2007, myself, my brother, and my family won the Bell Dennis Prospector of the Year Award at PDAC for our family's contribution to the industry and our discoveries, which include my uncles, the Keatses, who Newfound Gold's Keats Zone was discovered from, the Buckins, or sorry, the Duck Pond VMS deposit was a discovery that my uncle had found the original boulders, Uncle Al Keats, who also discovered the Newfound Gold deposit. Point Leamington was another discovery found by our family back in the 60s, which is a large VMS, low-grade VMS deposit in Newfoundland. So again, we've been around a long time. We're trusted guys. We're not, we're real explorationists. All we want to do is find deposits. So that's basically who we are.
Well, I always say, well, I basically always say this, yeah, but trusting someone with your money is always easier when you know they trust themselves with their money. And your setup filing tells me that you own about 1.3 million shares, some of which recently bought in the open market. But do you know what your average cost of capital is for this entire position?
Actually, I own about 7 million shares of Benton.
Okay.
And my average costs, obviously, I had some seed stock at the beginning. I think at 1 penny a share, and from there, I purchased most of my stock. And the 7 million shares, I should say, is directly and indirectly, but it's all filed on CEDAR. I think it's 6.98 million shares, something around there. And my average costs, I actually wouldn't know because I never ever sold a share, but it's probably got to be around a quarter.
Well, why I'm asking that, or why that's really important to me, is trying to figure out how aligned would we be if I bought shares today at the current valuation that I just mentioned. And what's important here is like how important is this investment to you? Because you can own 7.5 million shares, but I mean, is this a big part of your portfolio? Is this a big part of your net worth? Is what I'm trying to figure out.
Yes, it's probably the biggest part of my net worth. Myself and my brother are hands-on guys, so we've built many things in our career. We built a resort, for instance, that basically with sweat equity, and that resort we paid very little for, but now could be worth substantially more than probably my net worth. But it was all built by our own hands and our own hard work. But certainly my equity position in Benton is probably the biggest position I own. I do own various other equity positions in other companies, but Benton is certainly my biggest equity position.
Well, the only thing left for you is to have built a stereo company, and then you and Peter Monk would basically be the same person. I joke about this, I don't know if you know, but he was in the resort business as well. Do you plan on buying any more shares in the yield market? Again, I saw a couple of purchases recently, not too big of purchases in the grand scheme of things, but do you plan on keep on buying more shares? Do you think this is a good value to buy shares at?
Yes, I would definitely buy more shares. And I probably will. I mean, there's probably no question. When you're in drill mode, you're always in that gray area for blackouts and so forth. So there's always a few opportunities, where you have breaks and get assays out and so forth that you can move. But we've been pretty much drilling consistently since we picked this project up in October of 2023. So we've owned this project very short amount of time, and we've done a lot of work in a very short amount of time. I think this is probably one of the best projects I've ever seen, and I've certainly one of the best projects that I've had my hands on. And I mean, we've owned some good projects, myself and my brother, either personally prior to Benton or during Benton. What we called the Bermuda project is now Generation Mining's platinum, palladium, copper deposit. Now, we didn't own the main deposit. We only owned about 1/8 of that deposit that we bought from Teck Resources. But we did own the rest of the Coldwell complex, which owes the Sally Lake deposit and various other zones that were discovered by us that have significant platinum, palladium. So we sold that to Stillwater Mining back in 2011, I guess. But I can't remember the year now, but they bought, at that time, they had bought Marathon PGM, which is now, sold back to a junior company called Generation Mining. So full circle back to the juniors.
Okay. Do you, in the process, Stephen, of setting these companies up, have you set up anything privately? Like, is there a drilling company or a consultancy company or a helicopters company or any other company that is servicing Benton or any of the other companies you're involved in?
No, not myself and my brother own a company called Stairs Contracting Corp. We, do provide once in a while equipment, stuff that we may have, but 99% of anything we do is generally contracted to somebody else. It's too big a headache, to be honest, to contract anything you own yourself. Lots of companies do it. I know Frank Callahan, he had a drill company and done all of the work, which is great. I'd actually like to do that opportunity, but that's something that I just want to find in mind. I think the big win is in outlining a huge resource and being taken out by a big company, and that's the ultimate goal.
And I want to talk about these things as well. Just one last note: royalties. Do you own any royalties personally, or your brother or anyone within your family own any royalties on Benton's assets?
No, yes, that's not true. I guess we no longer own the asset, but we owned a royalty on what we call the Star Lake project, which was called Q9/Star Lake. We sold it to a junior company a long time ago, a few years ago. and they've earned 100% interest by spending and paying Benton cash and shares. But it was a project that was generated prior to Benton that me and my brother owned. But I own royalties outside of Benton that I owned prior to Benton.
Right. Not on Great Burn though. That's basically the main
No.
thing that I'm asking about.
Great Burn, we picked that project up from Spruce Ridge Resources. There is a royalty outstanding to a previous operator. One of them being Xstrata Mining, which is one of the biggest companies in the world. So they own a 2% royalty on the main deposit. And then there's a gentleman by the name of Richard Sutcliffe that owns a 2% royalty on South Pond and a 0.5% on the main deposit.
Right. Okay, well that's good. That basically concludes my, or at least what I call my smell test. Let's maybe move on to better understanding how you'd like to move forward and create value for the company here. What's the main idea, I suppose, and that's a broad question, but what's the main idea this year? Like, what's the unanswered question that you think has the best chances of moving your stock price and creating value for shareholders?
Well, I think it's just continue what we're doing. I mean, a lot of the historical drill holes, we see if we actually were close to any of those holes, the grade has increased substantially with bigger diamond drill core, better recoveries. So a lot of the drilling we've done, we've increased the grade substantially. We've increased it down plunge by about 25% at depth. We're down to about 850 meters. We started at about 600 meters down plunge where they thought the deposit ended. And we've pulled some monster holes past that historical drilling. And then infill drilling, we've pulled, monster holes, stuff that are greater than 5%, 10 meters, 5%, and even greater. So I think we just continue on, chasing the known zones and also looking for new stuff. And we have discovered tons of new stuff in trenching. With grades, we're doing a deep drill hole right now down plunge of Great Burnt. We're getting a bit aggressive being 200 meters step out, but what we want to do is if we want to make sure that the geology is still there, down plunge. And if we miss, then we'll pulse the hole. And that's what we did in our first round. We drilled some holes with some weak mineralization. We pulsed the holes, and then we chased the conductor that we hit in the DPM, and we hit it again. So that's what we did, in the second phase of drilling. So that's probably what we'll do in the third phase or fourth phase of drilling. Is with deep geophysics, but also what has to be done in this belt. We have, you can't produce a 15-kilometer long system without something pretty enormous have happened. I mean, 15 kilometers is a long ways for copper and gold mineralization to be spread out. So we just got to keep going. We just got to keep drilling, understand the geology. We've brought in a guy by the name of Mike Cooley. We've consulted with Alan Stone. Mike is a structural geologist, very well known. He actually gave us some tremendous insight from mapping our trenches, relogging historical holes, and even the local government has blasted out some pits to add to the Great Burnt power dam, which I should include. We have a hydroelectrical power dam within 2 kilometers of the deposit. So you can't get better infrastructure. Prior to us having this project, Spruce Ridge built a road through it. It's the first time that this project had true good access. Prior to that, Celtic Minerals and those guys, they flew into various lakes and camped. And I don't know if you've done ground geophysics or ground exploration, but when you got to walk a kilometer before you even start work in 30-degree weather, it's tough work. So now that we have a road through the project, 15 kilometers where we can drive a truck, it's a game changer for discovery. And since that time, we've made multiple discoveries. And the one thing that we're finding is through our structural geology, through remapping the holes, we found that basically the deposits come out and VMS deposits form along the seafloor as a bed of massive sulfides. And then, of course, when those things solidify and get covered by other sedimentary rocks and solidify, and then, of course, then you have continental movement, and it squeezes the geology together, and or sometimes it tear it apart. But in our case, it's been compressed to accordion shaped folds, and in some cases, it's been compressed so much that our massive sulfides, which was a long lens, has been compressed almost into a ball that's now only got about 100 meters by 50 meters kind of shape to it. You know, almost like an eye shape, but with little teeth on it because of the folding. Anyway, when you do magnetic surveys over this, very detailed magnetic surveys, we're finding that massive sulfide, which is mostly pyrrhotite and associated with chalcopyrite, which is copper mineralization, is very, very magnetic. So we've found that, especially in the gold zone, that when we hit the mag high, that's where historically they had really big gold numbers, like 51 meters of 1.8 grams gold with a little bit of copper. And what we've done now is we have 2.7 kilometers of that done on very, very detail, and we can pinpoint where the top of the sulfides is with the massive pyrrhotite. At least this is a conceptual idea, and we can see it in the mapping, and we can see it in historical drill holes. So if we are correct, there's a potential for about 2 to 3 kilometers of this massive sulfide lens that's been compressed into a ball that's really close to surface that we could put 2 holes into and get dimensions of an ore zone. Basically a vertical hole through the center of the magnetic anomaly, which will give us the height of the pyrrhotite zone. And then when we see this, where we know that the center is, we'll draw a 45-degree hole across it. And we're hopes of basically delineating a gold horizon that is extremely close to surface, but will contain a substantial amount of gold that can be open pit. So there is historical holes that we've compiled over 2 kilometers, about 2.1 kilometers, that has gold hits in them, and then they've drilled holes like underneath and has come up with just small amounts of gold over narrow widths, is because we think the massive sulfide lens is above where they drilled, and basically they clipped one of these little folds. So if this theory is right, we will know in the coming months, because that's how we're going to approach drilling this deposit off. The copper zone is another beast. The southbound copper deposit, it seems that there's 2 horizons. There's a copper horizon and a copper gold horizon. And at the north end, it's where they meet. And that's why we're getting 3.5 grams gold and 1% copper in channel samples and stuff. So we're going to test a bunch of those holes and see where they eventually bifurcate. But we know that it definitely bifurcates because we've now found the copper zone about 1.5 kilometers south, maybe even 2 kilometers, and it's all on its own. It's never been tested. The rocks around it have been completely solidified by some sort of event. We don't know what it is, but there is this huge ultramafic mag high with a conductor on it that is screaming in elevated nickel. So we don't know what that is yet, but we've got samples out of it that grade from 0.2 to 0.3% nickel, which is like up 6 pounds per ton of nickel. This could be a similar situation to, I think it's called North Atlantic nickel, to the east of us. It's probably the same rock unit where they're chasing a awareite, which is a stainless steel nickel mineralization. But we haven't done no metallurgical tests. But we do have about a dozen samples that grade better than 0.2 nickel right now, that we've just taken random samples of. That's going to be a bit of an investigation on its own, but right now we're concentrating on developing the copper and the gold story. But something special is happening about halfway up the belt, we believe. I always call it the mothership because there's conductors on this thing that's been untested, and we're going to do some ground geophysics on it this fall and probably test a couple holes into it, once we get ready.
Loads to touch upon there, Stephen. Which one of those things, though, to go back to the question, which one of those things do you think is going to bring the most attention to your stock? Because that's what you got to figure out here is basically how do you get some new buyers into the stock, essentially. So what of those things do you think is going to bring the most buying?
Well, I'm not, again, I'm not a market musician because you just never know. I mean, I've been in this line enough to not even attempt to predict anymore. But one thing is for sure is gold is hot, and copper is hot. So we got two commodities that, one drill hole is a game changer. I mean, that was the first or second drill hole that we drilled in Great Burnt. It was a game changer. We were a 5 cent stock, and all of a sudden we hit 20 cents on big volume. So drill holes and drill results provide excitement to companies, and that's what we aim to do is chase this gold zone down. If we can prove quickly with 30 holes that this thing has the potential to be 2 million ounces of gold near surface with some copper credits, then we're gonna do that. So we are gonna do those holes. We got the money to do it. I think you mentioned we only had 200 million or 200,000 in cash in your and the temporary investments are actually hard dollar. They're not flow through. So we actually have around 3.1 million currently in cash. So about 2.2 of that is hard dollars, and about $1 million that is flow through. So we're in good shape. We also have about just over $1 million in equities, and 400 grand of that or so is in Piedmont stock from our partnership in lithium. And they owe us another $1 million payment, I think in October, for to stay in that deal, which I anticipate they will, because the project is phenomenal, and they've been putting in exploration money on that project since they picked it up. That's an exciting project on its own.
I do want to talk about that later on as well again. And good point on having the money. I also have it on here that we should talk about budgets. Getting excitement into the stock, though, what seems to get excitement into stocks right now is high grade. And with the last news release, you did announce some high grades. But the very high grade zone and the highlight was 6.12% and 11.3 grams of silver, 6.12% of copper, of course, 11.3 grams of silver over 1 meter. Is that worrying you in terms of the potential for a nugget effect? I mean, one meter, relatively narrow, or I mean, are you looking to prove a continuity here? What are you working at?
Yeah, I mean, look, again, I've been in exploration a long time, and these things are hard to find, man. It's you got to understand, I've been searching my whole career for a project like this. So 1 meters of 6% copper, to me, is as good as 50 meters of 1% copper. These things are extremely rare, and I can only deliver what the drill bit gives us and what God put in the ground. So we're just going to keep going. The geology is right. Like I say, system 15 kilometers of sulfide pumped out onto the ocean floor. This is a huge system. So huge systems produce huge deposits, and that's my one experience that I know for sure. So we just got to do the work. I mean, these things are not all going to be at surface. Deposits don't just come to surface and that's it. I mean, there's lots of buried deposits. Sedimentary rocks. We're talking about Newfoundland, some of the oldest rocks in the world. They've been buried by sediment packages and so forth. So you got to do the science, do the geophysics, sample everything, do as much stripping as possible, understand the geology, and you just keep going. And perseverance, from my experience with Noranda, and I was involved in dozens of discoveries with Noranda mining. So this is a project that I believe is going to deliver that. We just, it's sad to see the share price because you work so hard to finally get a great project and get the stock going. And then, whatever it is, shareholders don't believe, or, maybe they were in it at 4 cents and they see the share price coming off and they just move along after being in the project, or in the company for a few years. I mean, Benton is one of the only stocks that's been up last year, in the junior mining sector. There's a handful of companies that are in the positive, Benton was one of them. So, it's just hard to know. I mean, if I were a multimillionaire, I'd own tons more of Benton. Unfortunately, my portfolio is in bad shape as everybody else's. So you just kind of hold on. You don't sell because you're scared. That's the worst time to sell.
Well, you just mentioned something about better understanding the ore body here. And I suppose with this recent news release, you are starting to better understand the deposit's geometry. Is that part of the work as well? And talk to me about the geometry. What do you think? Because you mentioned it's a lens, but if you can give me some more background on this, that'd be appreciated.
Yeah, so what we see is a major structure that probably goes for, right across the island, in fact. And then, of course, you need the right geology. So you need some sort of intrusive rocks around there. We actually don't understand yet what those intrusive rocks might be that's driving this whole system. It could be a part of this ophiolitic ultramafic unit with the high nickel in it. It's just strange that we don't see any nickel in the deposit, but we do see cobalt, which is, of course, associated more with copper nickel deposits than anything else. So I think there's a bigger story yet to be told here. So you got a major structure, you got the right geology, you got the right environment. Beshi types can be huge. I mean, Windy Craggy in BC was one of the biggest VMS deposits found in recent years in Canada. So I think you just again, you got to do the work. You got to, it's not perfect science because geology will throw a loop at you every time. But when you do have a huge structure and you got massive sulfides and you certainly pick a pattern out, we can see there's a 30-degree plunge on our sulfide zone. So we basically just step out and you poke your best hole and basically draw an arrow and say, okay, we're going to test this. If we miss, then we'll pulse the hole with geophysics and it'll tell us if we're up or down or if it's gone. But, in the last geophysical trial that we did, it told us it was there and we re-drilled in phase 3 and we hit it. So, that's just part of the business. You just got to know what steps to take. Be frugal with the money. I was talking to one of my bigger shareholders this morning, and he said, right now you got $1 million, so make those count so that you can get this thing back to 20 or 30 cents. Yeah. And that's what we plan on doing. We'll instead of drilling 20 holes in the main deposit deep, because those are expensive holes, we'll drill 1 or 2, and then we'll go and drill the shallow stuff where we'll get the bigger bang for our buck. And lots of news flow and excitement, hopefully back in the story, and and you just keep moving forward. Marathon Gold. I mean, I watched that thing from a quarter. I think I financed, was part of the seed financing. I didn't put very much in there, but you watch that thing, go to $3 and then back to 80 cents and then back to $1.50. It's a life cycle of a developer, but they're going to be pouring ounces and pouring bars in the next 12 months. So that's an exciting project and exciting thing to watch. And I think we're going to be able to do it here with this project as well. It's like I say, I think it's one of the best projects on the island.
I do want to talk about timelines as well here, because I believe Marathon did it relatively quickly. It's one of a few success stories to talk about. So I want to touch upon timeline. But I also know you want to do some met work. You just told me that. And why I want to talk about that is because you've now added gold, silver, cobalt, and zinc to your equivalent grade calculations. But I'm wondering if those will actually be credits and how much of it, because it's not all high grade. Most of it is not really high grade because most of it is copper. So do you think these other metals are going to be credits, or do you think they're going to be penalties?
Um, it's hard to say. Again, it's going to depend on recoveries. And you're right. I mean, these, if they're not penalties, they could be a wash. They could add value. I don't know. We haven't done the metallurgical work on anything. Spruce Ridge done some met work, from some core earlier on. Copper, they did very basic, met recovery. I think their copper recovery was 80 to 90%, which is good in a first pass. But you're right. I can't tell you until we do more work on that. Gold, on the other hand, when you're talking, a 1 to 2 gram gold deposit, you know, those will be probably solely focused on gold, and copper will be a byproduct. Uh, so, if you got a gold circuit, you'd have to build a gold circuit with the copper deposit. So those are pretty standard. I mean, Rambler Metals, to the northwest, they had, uh, a gold and copper circuit, which they recovered both. So, pretty standard stuff. Silver, again, you're right, pretty low. You don't know if it's going to be recoverable, or the smelter is going to take it. So, those are yet to be determined. I think we're a little bit early for those conversations until we actually get the resource built, and so forth. So,
When is that going to be? I said I want to talk about time. Like, when do you think you're going to have an updated MRE?
well, again, one of my bigger shareholders, Eric Sprott, he always says, don't ever do a measured and indicated resource estimates until you're finished drilling. And that's because we've seen it, and I've seen it. It's detrimental to a lot of companies. You keep trying to put out resource updates, and all of a sudden, the market, for whatever reason, always thinks it's not good enough, or it's too small, or so. We're just going to keep working for the next year and a half. If it looks like, we've shut these things off and there's no upside potential, then it's time to do your PEA, new PEA, new resource estimates, and then you start doing your met work and so forth. But I wouldn't say we'll be doing any of that for the next 12 months. This will be pure exploration and advancing the project to be in that position to build a resource.
Well, of course, you don't build a resource before you're done drilling. And I suppose my question is more about, when are you done drilling? How many meters are we talking about? How much? I mean, are you ever done drilling?
Well, I mean, not, you probably never ever done drilling, I suppose, but when you certainly get to a certain place, you will have to move to that. I mean, you look at Newfound Gold, I think they've drilled 700,000 meters of drilling so far, no resource estimate yet. So I mean, we've drilled 12,000 meters. It's early. We've got a lot of old historical holes that we could add to that. A lot of those we believe are, again, unreliable, or certainly underestimated from grinding away of the massive sulfides to poor recoveries to small diameter core related. Even when we get up to South Pond and we look at the casings that are left in the ground, I mean, they're an inch big. So when you're drilling small core like that, it's really tough to get a good handle on, what the true mineralization is. And then outside of that, they didn't even know there was gold in that deposit until like 1987, when Noranda Mining relogged some of the old core and resplit core that was the size of your baby finger, and put that in the lab. So small of a sample, but it contained gold. So they realized at that point that the north part had significant gold in it. They had up to 10 grams in some of their sampling. But again, from resampling old core that's already been split and so tiny. So we just got to drill some new holes in this and get a true picture of what's really going on, and that's where we're going in the next few days is starting to drill up at South Pan and South Pan B Gold Zone. So we plan on at least 30 holes up there that are less than 100 meters in at depth. And then of course, we went to raise $3 million is what we really needed to do the work for this year. So obviously we'll probably need to raise some more flow through down the road, or get a strategic investment from somebody. We've had tremendous interest even up to now in various groups liking the project and seeing if there's a possible angle to be a part of it somehow. So there's always different ways to skin the cat, as they say.
Sure, and that's something we can touch upon as well. What about permitting though in the meantime? Because you mentioned you want to do some drilling up there as well to the north. Everybody happy? Government, locals, fishes, birds, everyone happy up there?
We have a tremendous relationship with Andrew Parsons, the Minister of Mines. In fact, I email him all my press releases. He's been on our lithium project. We flew him in last year. These guys are super supportive of mining and mining exploration. We have all permits in hand to drill to 2024 to the end and onward. We've had no issues. Like I say, we picked this project up. We started drilling in October 2023, and since that time we've drilled 12,000 meters. We permitted our mining camp, permitted our drill pads, and trenching. I mean, you can't ask for a better government than the Newfoundland government. Hence, that's why Marathon Gold, was able to drill this thing off and develop it in the time frame that they did, is because the government is extremely pro mining, and of course, as long as you do everything environmentally responsible, that's they're on your side, and that's one thing we take pride in is making sure that that we keep the bush clean, the sites clean, keep the water clean, and we've had no issues whatsoever with the government.
Indigenous and local communities are also happy with you doing work there, I assume.
Absolutely. We are, we're kind of in the middle of nowhere, so that's a kind of a good thing. There's a government road built to the Great Burnt Power Dam, all access, all winter road, so we can drive all year. We got a great relationship with Newfoundland Hydro. We camp right on the side of the dam. Basically we've even had conversations where the local head guy said, look, you guys are great stewards to the dam and taking care, making sure nobody's in there fooling around, because there's been a lot of theft and so forth for copper lately in various areas. No, they're everybody's happy to see us there. No indigenous issues whatsoever. There is a reserve, Con River, about 120 to 150 kilometers away. It is the only native reserve in Newfoundland, but they actually don't have land claims because it's not. They're actually not from the island, or they're from the mainland, but been settled there for a couple hundred years. So. The local native population was wiped out in the 40s from various colonization, I guess you might want to call it. They were called a Beothic Indian, Red Indian.
Right. Okay. What about it's obviously good to hear. You said something about money, and I do want to get to talking about money. What else can you do? I mean, is there something strategic or something creative that you can do instead of flow through, or instead of straight equity? And what are you thinking?
I mean, I've been known to be a creative guy. That's why we've got this Piedmont deal put together. It's the only lithium discovery in Newfoundland, and we structured a deal whereby Piedmont paid for, the IPO. Benton shareholders will end up with about 40% equity in the company, and it'll be extremely tight company. It'll be probably one of the tightest companies on TSX when listed. So I've been known to be able to structure good deals. And we are, as I mentioned, in talks with various groups that are focused on critical metals, and or undervalued investment opportunities. So we'll see where that goes, but nevertheless, we do have 1.1 million that we're going to sink into the ground right now, and hopefully that will get us that excitement where we can get the stock back to 20 or 30 cents or higher, and we play ball when the timing is right. That's always a key thing in this industry is you take the money when it's right and on your terms if possible.
You are covering G&A though in the meantime, right? Because as I mentioned, well, to my calculations, that came up to about 110,000 per month is what I believe I said. You're covering that with your cash. They said 1.1 million, and then you're spending the flow through in your project. But so you're basically well covered to finish this program, have news into the market, and hope the market has also improved in the meantime.
Yeah. We like I say, we have some equity positions in other companies that I believe will, ultimately turn around. We own 24.6 million shares of Clean Air Metals, which was spun out of Benton. And it's a beautiful copper, platinum, palladium asset north of Thunder Bay.
Yep.
And a completely undervalued company. We own 0.5% royalty on it. I believe it will be a mine one day. It just got need the right commodity prices to and the right timing and the right partner. I think that will come. It's only 65 kilometers south of Lactazil Palladium Mine. And the chairman is Jim Gallagher. He was the ex-CEO of North American Palladium. He sold that mine to Impala for $1 billion. And I think one day they're going to need that ore, especially if platinum overtakes palladium, given that it's a 95% palladium asset. And if palladium falls and platinum reaches $2,000 or $3,000 an ounce, which I think could be plausible, and given that it's half valued of copper in the resource, I think they're going to have to come for it eventually, or either that if they sell the asset, whoever buys it will have to come for that deposit. It is the only known large resource close enough to that mine to be even close to be something that could add extreme value in a quick hurry to a good asset.
What I'm asking about Creative Solutions, Stephen, is because the number of shares outstanding is getting up there. So you said you haven't done a rollback since 2005. Fully diluted, you're over 200 million. So is there any reason for you to do a rollback? Are you planning one anytime soon?
No, I'm not planning one. I see, probably half the companies on the exchange is got far more shares out than Benton. I believe it took me this long to find this project. Unfortunately, now that the company is, it's got a lot of dilution, but nevertheless, the value is still there. I mean, if I had $100 million market cap, then, this is a 50-cent stock. So, that's, it should be $100 million market cap. It probably should be more, on the asset that we have. So, and the potential that we have. So, I think it'll come. We just, I just don't want to dilute, at these prices. It was hard enough at 16.5 cents to watch that, but, let's hope I can get this thing to 30 cents for the next financing, and just keep that ball rolling. And that's what I'm trying my best to do.
What I'm also trying to understand here, I'm asking these questions because I'm basically trying to understand how far you can take this reasonably and relative to what the asset has been at before. So, and I don't want to sound like I know what I'm talking about here because I certainly don't. But by the looks of it, the land package has been looked at historically in multiple occasions from various perspectives too. So, what do you think they missed? What do you think or misunderstood about it? And what are you doing differently that will then increase your chances of success and getting that stock to 30 cents to do that financing there?
Well, look, probably 50% luck for one. We probably drilled the best drill campaign that's ever been drilled on that project when we picked it up in the first 2 phases. And that was, yeah, I don't know. I mean, Celtic Minerals had this, they're a great company. Barry Green, who was their VP of exploration at the time, excellent geologist, know the guy very well. He actually put together a lot of these targets that we drilled, but at that point in time, they went bankrupt, I think in 2008 crisis. In fact, that same time, they owned the Rambler deposit that now Firefly Minerals has, $150 million market cap on. So Celtic had a knack for picking up great projects. They had some stuff around Voisey Bay as well. Again, great geologists, knew what they were picking up, but it was poor access for one. So your dollars went half as far. When you got to fly drills, so forth. So again, you pick your best targets. Not a lot of trenching done. So they didn't understand the geology, didn't understand the structure, didn't understand the folding. So this little bit of knowledge that we have, we believe is going to help us tremendously. And again, it's probably 50% luck that the mineral's there when you actually drill it and hit it in the sweet spot. And I think we managed to do that. And build on those deposits substantially. So and you gotta do the science, you gotta do the geophysics, and you gotta have good geoscientist interpretation. Guys like Alan King, who spent his career with Voisey Bay and in Sudbury, drilling off the nickel massive sulfide deposits. He's our consultant geophysicist. He's interpreted all of our data so far, and he's been pretty bang on with targeting. So we're pretty happy to have him. We just brought in this guy Mike Cooley, as I mentioned, structural geologist. He'd done some mapping for us on our lithium stuff, which turned out to be also very accurate. So when you find guys like that, you use their knowledge and build on all the information you got, and sometimes the puzzle comes together.
It's tough out there. That sounds like something that's kind of empty to say, but it is. And so you do need the market to work with you, and you do need the science to work with you. Why do you think it hasn't worked out yet, though? Before you, again, I'm asking you what you can do differently, but what did the previous operators missed?
I don't think they missed. I mean, Asarco, was a VMS company. They were mining the Buckens deposit when they were exploring on the first discoveries. So they found it. I mean, there's no question there. Back then, they needed probably 5% copper or have the zinc and lead mineralization with it. It wasn't a true volcanic massive sulfides like Buckens. It was a Beshi type, which was not well known at that time. Also, then you had guys like Celtic, Noranda Mining went in there, poor access. They inherited the property because they bought the Buckens database and the Reed Brook or the Reed leases that the deposits were on. So they found the Duck Pond deposit. So Noranda were great explorationists, but again, done very little work because of poor access, flying in, no road access. And then same for Celtic. I mean, great work. We used all their data. They had some great intercepts, But the problem was they'd have one or two intercepts. They'd raise a little bit of money. They'd go back in there with 2 or 3 drill holes, wait 3 or 4 months, go back in with another 2 or 3 drill holes. That, that generally don't work unless you pull a monster hole that you can raise that $10 million on. And I think those monster holes are there. We've already proven that in the Great Burnt deposit. And I think they're probably going to be there for the South Pond and the South Pond B and other new targets that we've outlined. So we got to get in there and do the work. It's not that they missed it. We're using all their data. We think they were right on it. They just maybe didn't understand it 100%. And they did hit periodically, and it was because they didn't understand that compression, mostly that compression folding that we believe is there, and it's balled the massive sulfide up. And sometimes they drilled a little bit too far back and they went underneath it, or they drilled too far ahead and they were above it. But sometimes they did hit the sweet spot, and those holes are there. There's probably 40 holes out of the 80 that's done that hit ore grade intercepts. Problem is the ones that he missed on, you can't build tons or grade because there's nothing holds together. We believe it do hold together. We just got to drill the holes in the sweet spot and show that that little package is all together and continuous. That's our focus now.
And again, that's the Great Burn project that we're talking about, or have been focusing on here for the past about an hour or so. That's your flagship and your main focus. You still have the spin out to deal with, though. The Finland Lithium Company. What's the plan there? What's happening this year? What's going to be the value here?
Yeah, so that company was financed at Piedmont at $1 a share. They put in a $2 million equity investment, and they have a $12 million exploration commitment on the project to earn 62.5%. So the company will be left with 37.5%, and then it will be a joint venture after $12.5 million is spent on the project. And also Piedmont will have to pay Benton and Sokoman another $4 million each in option payments during the course of that option agreement. So we'll get some cash out of it as shareholders, plus we keep a 2% royalty, as Benton and Sokoman would keep a 1% each royalty on future revenues that could be developed from that project. So we've filed everything to the exchange. We've done our fair boot financials. We've gotten feedback several times. We should have an update out relatively soon. We've choose a mail out date for the information circular, which has to go out, of course, prior to, I can't give that date because it could change with the exchange's ongoing comments that we've been dealing with. But everything has been filed for the last couple of months. We're a long ways down the road for that spin out. So we're hoping to have something out in the next few weeks. We will dividend approximately 2.1 million shares of Benton to Benton shareholders of our 4 million shares, and we're going to keep 1.9 million. And Sokoman will do the same. So there'll be approximately 4.4 million shares or 4.2 million shares trading in that company. So it'll be an extremely tight lithium company. And of course, then we'll have exploration ongoing with Piedmont funding the exploration. So should be a fun project. And I think there's going to be a lot to be found on that project yet. And it's over 65 kilometers of strategic land that we have on the favorable horizon that's hosting the lithium. So it's right now we've only detailed worked about 2.5 kilometers of that.
Might be worth first talking about it once it happens. So you're coming back on the pod for kind of an update on it. But as, based on what you're telling me here at the beginning, you told me that your goal is to find something big, find a decent deposit, and then sell it. It doesn't sound like you expect that to happen in the next 12 months or so. When do you think that time comes? It's hard to predict. I'm not asking for an exact date, but what does the company look like come time to transact it?
I think in 12 months, we will have resources outlined. I think, with enough drill holes and confidence in joining what I was talking about of these historical holes that did hit, and if we can join every one of those previous intercepts, there will be a substantial resource, and it should be fairly easy to calculate. So I think in 12 months, we will have an idea of the size of the system, but I still believe that there's other zones to be found there. The system, the story is not completely told or unraveled. So there's all kinds of exploration potential that could have even a much bigger implication to the success of the company. But if we can build ourselves into a couple 100 million pounds of copper and 1,000,002 ounces gold, now we're talking mid-tier, group would want to own this. I'm not a mine builder, as I say. I don't pretend to be. I mean, obviously, you can hire the right people or bring in the right partners to do that, but my hope is to build this into something very special that we bring in the right partner to build it, and our Benton shareholders get rewarded for it, for their patience.
This has been a good overview, Stephen. What am I forgetting to ask you, though? What did you come here hoping to talk about that I'm failing to bring up?
Well, the patience is what you ask your shareholders mostly, because these things, as you say, Rome wasn't built in a day. We've only owned this for not even a year yet, so we've done a lot in a short period of time, and I think in 12 months' time it'll be even a much bigger, better story, and that's my goal.
Good. Well, let's keep catching up over time, Stephen. This has been a good overview. As I said, thank you so much for investing your time. I mean, hopefully speak soon.
Thanks very much, Anthony.